I hope everyone is able to see my screen.
Yes, Puneet, we
Yes,
can.
yes.
Great. Okay.
Yes.
So we are at day 2, 11 Gen, and this is how the agenda looks like. So morning we will have 4 sessions today. It will be led by Mithun on the chemicals, and then Rashmi will be talking about certain cables company. Ankit will be talking about investment banking, and Prajot would be on IT enabled services. Then we would have a audience lucky draw, and this is fastest finger first. It's a reward based system, so gift vouchers are applicable. So please be paying attention to the presentations today. After lunch, there would be presentations by Vineet on aerospace, and then Devang on the consumer durables, and by Amar on pharma. So audience lucky draw is divided into two parts: one in the morning session, one in the evening session. How it plays? So I will let you know. Format of the presentations remains same, roughly 40 minutes for each presentation, 5 minutes for the spillover or question and answers. Let's try to have the question and answers at the end of the session. And also, if there are more questions, we can always take up in the chat or in the WhatsApp group where we are all there. Okay, so audience time, how it plays, just pay attention here. So the question will come something like this. Alpha Learners Day is on which day? For example, there are 4 options. You have to choose the correct option A, B, C, D and put in the chat. So that's how the questions will work. There will be 2 questions and you have to answer both the questions correctly and be fastest. So if you answer one question fastest and second question you are not fast, then you are not eligible there, right? So the person who has done both the answers correct and made it relatively faster compared to others in both the questions, he would be eligible for this. So that's how this questions will come. So I hope this is clear. And now we can start with the presentations of today. So Mithun, you can start sharing. I will drop off my screen.
Okay. Let me know once you're able to see my screen.
It's visible to us. Let's go to the presentation.
No. So, okay. So firstly, as in, I'm going to talk about the chemical specific company, but I wanted to share my peace of mind in terms of how I select the stock, why I selected the stock, so that so that we think alike when I present as of now, and then you can raise me questions about all the things which I'm going to discuss over here, not specifically related to stock, related to the sector or what my thought process is.
You can
So
put in the presentation mode for this one.
yeah. So okay. So I think so currently let me share with start with the process called in terms of technical analysis. What I usually do is I follow sectors. Initially, I follow sectors, what each and every sectors have been doing, and if at all I don't have that sector specific stocks, what I do is I create customized index, as in customized index in terms of only those specific stocks which I think are similar, and I combine together and create the index over here. So here I can say, let me explain this one, and then we can automatically gauge the other sectors, other indexes which I have made it. So here I have made APA, KEI, Polycab, Ramratna wires, precision wires, dynamic cables. Precision wires was incorrectly selected, but let me these are all indexes which was created by me by, let's say, 1.5 years back. And now I don't have the paid version of TradingView, so I am not able to modify these indexes. But this is how I select the index. I create an index and I see how does it work in general. So this is for the wire companies. This is for the EMS companies, come defense companies. This is for the water sector theme companies, just Ion Exchange, Wabak, Chembond. This is for the microfinance lending in terms of credit access, amount finance, equity, Ujjivan. This is for the specialty chemicals, so-called specialty chemicals at that time. SRF, Atul, Navin Fluorine, Fairchem, Galaxy. Over here, this is I don't know whether you're able to see this or not, but this is a daily graph, and this is okay. Right, and this is the weekly graph. So you can see the difference in the daily and the weekly graph. Weekly graph indicates that the higher the trends, as in higher the number of days you consider in a particular graph, it gives you more better picture. So this is what is happening in the chemical sector. The so-called specialties index has been hovering around the same things, around let's say 3,460 around these prices since 2023. So there hasn't been any specific movement in the specialty index. And this is what you can see in most of the chemical stocks, that they are languishing around the same prices over here. But within that, let's say so my thought process is, if at all, when I'm going to present a stock and when I'm going to talk about the margin of safety, which has been my prime focus while sharing the stocks in ALD sessions, I select where the margin of safety is very high, so that you lose, as in you lost very less, and when you gains, the gains are pretty much good and solid. And that's the reason when I've selected AMI Organics in ALD session 1, where we talked about the same stuff, the sector hovering towards the same thing, but AMI is going to be an outlier, and that's how it moved in last 1.5 year, where we have discussed. And that's the reason now I'm presenting another stock within the same from the same thesis, and that stock is Tatva Chintan. Okay. So this is the Tatva Chintan specific daily chart pattern, where it is below everything, below 50, below 100, below 200, everything. But over here in the weekly graph, you can see that we are making over here, it tried to stabilize over here around 1,600, but it broke down. Now it is trying to get stabilized around 840 rupees, something like that. And that is where the price is hovering right now. The only selection why I'm selecting a Tatva Chintan now, because I think this is going to be an outlier in next 1.5 years, where the possibility of the gains is like around 2x or 3x possibility uh, on a uh, on a just return mean reversion factor, rather than, I will say, the high growth rate. It is just the mean reversion which will happen and leads to the 2x or 3x possibility on a easy way on Tatva Chintan, and the downside risk is very low. I will mention the downside risk also, why we have downside risk very low over here. So let me just give a brief over here. Tatva Chintan is a chemical company. They do not mention themselves as a specialty chemical company, but it's more like a very niche player in certain products which are not being created in India, and the usage of this product is going to use more dramatically over coming years. So in terms of fundamental ratios and the fundamental valuations, we have the stock quoting at 112 PE multiple. From a PE multiple point of view, it looks extremely over expensive, but I will justify the reason why the PEs look expensive over here. You can see the promoter holding is 72%, EV by EBITDA is 38 times basically. The sales growth has been tepid around 9.42%, and the profit has been degrown in last 3 years. And the ratios pretty much looks bad, and in terms of horrible, apart from the PE multiple, which looks extremely high, while the other, which is also bad, but the rest of the thing says that Tatva Chintan is gone, as in terms of. Here we have the quarterly results where the margin came from 28%, 22%, and it has been falling down. And now it is the latest quarter is 6.68%. And they have shown a loss also over here at the PBT level, profit before tax. So The same thing in terms of sales. The sales has been 68, then 109, then it has been falling down 61, and then went to 45. You can see the EPS over here from 43, 20, 12, and 7.54. So the EPS has been degrown, in fact. The balance sheet shows a completely different picture in terms of the how it looks in terms of solid structure, because the borrowings, which went as high as 170 crores, it has fallen down to 15 crores. Okay, that is the first thing which you can note. Over here, you can see the balance sheet, the total fixed assets, which was around 196 in 2023, went up to 425 crores, along with the capital work in progress, which is 140. So you can see the asset creation has been heavy, the borrowings has been low, and that's how it looks over here. So this is the major factors for me. The return on equity has been fallen down. The next thing you can see over here are the ratios, the debtor days, inventory days. The cash conversion on an average is around 300 days. This is from 2023, it has been around 300 days. The ROCE, return on capital employed, has fallen down again from 26 to 7%. This is where the PE reflects, as in the PE ratio over the period of time. You can see the earnings has been fallen down, and that's the reason the PE is reflected as a very high number. If at all the earnings were as good as this, the PE would have been depressed. But now the PE look expansive because the earnings has reduced drastically. So in future, let's say now there are only two possibilities. The one possibility is the PE will correct and justify the earnings will be low over a period of time, where the PE will fall down. And the reason behind PE to fall down is going to be stock prices falling down. Or the other reason, the earnings will increase drastically, and where the PE will compress himself because the earnings have the denominator has increased drastically. And the stock prices, even though it's remains going to be same, the PE will compress as it comes down to, let's say, 40s, 30s, that kind of PE multiple. I will just highlight that the second possibility is far higher as compared to the first possibility, because we have the earnings which is low, but the asset creation has been heavy. The borrowings has been gone down, and that is the reason behind that. Or you can see the promoter holdings, which was as high as 79%. Because of the regulatory requirement, they has to go below 75, but over here they went below 72, around 72, because that's when they did preferential shares to Goldman Sachs as well as the ICICI Prudential. You can see over here, and they offloaded, as in they bought the shares around 1,700 prices. That was the preferential share price which was allotted at that time. And that's the reason their ratio has fallen down from 79 to 72. There's no big investor, no HNI investor, nothing over here. It's only the DIS, FIS, and the equity shareholders, which are 17%. So let's talk about the business basically. So Tatva Chintan as a company has have business derived from PTC, which is phase transfer catalyst, SDA, electrolyte salts, pharma and agrochemicals intermediates. So these are the four parts of the business, four division of the business, out of which the FY24 split was the PTC was 27%, SDA was 42%, electrolyte salts, which I think it's going to be big in coming days, it's 1.3%, and this is also going to be getting bigger, which is pharma and agrochemicals intermediates, which is around 28%. Over here, you can see PTC as a product. The same product has been used, and there's a forward integration to make SDA. And the same product which is used in as in zeolites is something which they don't make it, but SDA is used to make zeolites, and the SD as a product is used for electrolyte salts, which they are making it. So the same product is being forward integrated to SDA, electrolyte salts, and pharma and intermediates. So let us talk about what is PTC. Basically, PTC is nothing but a catalyst which is used for the reaction. If at all you are a science student, or maybe in 10th also, Basically, we talked about a catalyst which is used to reduce the reaction time, or better, let's say, induce faster way to react certain chemicals. And that is the basic definition of catalyst, basically. And that is what they make it. PTC is not specifically only one molecule. PTC is a generic term. They define there are more than 100 catalysts which they produce, and this is predominantly used in multiple sectors. As in, it's not only used only in agrochemicals. It is used in pharma sector as well as many other places. Wherever there is a reaction, a certain catalyst is required, and that is where they use it. So they have they have been used in pharmaceuticals, they have been used in flavors and fragrance, agrochemicals, and environmental control process. I don't know much about the environmental control process, but let's see, indicates the quite expansive way of use of this PTC as a product. Then we have SDA. So what is SDA? So SDA is nothing but structural directing agents, which is more like, you understand, there's another chemical compound which is used to produce another product called zeolites. And zeolites is a structure, a molecular structure which holds, let's say it's more like a salt, or which absorbs water in a way, and it helps in creating certain products which are used in controlling the emissions, basically. And that is where they are predominantly used in terms of automobiles. And that is where they talk about the SGA requirement, as in wherever there is an emissions, the SGAs are zeolites are far better product to control those kind of emissions. And that is where it is. So this is like zeolites. This is not naturally made in India. Anywhere it's not naturally made. It is made using the volcanic eruption, basically. So there are only few places where it has this naturally found zeolites, but that is not being used. It's more of the structural SDA is being used to create those zeolites. And the major requirement is for the emission controls. That is what Tatva Chintan produce, at least that kind of SDA. Okay, and let us deep dive more into SDA, because SDA forms around 42% of their business. As in, let's say 50% of their business comes from the SDA only SDA. Okay, so I've mentioned that this is predominantly used for the emission control in the whole segment of automobiles. Saschem as a company, which is a US based company, controls around 80 to 85% of the SDA agents, and Tatva got the rest of the 15. Why only 15%? Because they started SGA from 2018. So it's not an legacy product of Tatva Chintan. It is just a newly started product of since 2018. And to get into a segment which is going to be used in automobiles companies, they require certain stages of approval, which take years to get into it. And when they entered, so in 15% they got only few players. So let's say they got only 2 to 3 players. Within this 2 players, basically one was Chinese and another was non-Chinese. And what happened in China during 2020, the auto sector was in completely different phase in terms of, so the consumption requirement of SDA went down in China, but the same thing catch up in other segment, other non-Chinese player. That is what been defined over here. As in, so other was non-Chinese, and that's where they are able to get the volume. So they expect a very big jump in coming days, where they get more market share of SDAs, and within that, the emission control requirements will change. As in, there is a concept called, like what we have over here. I forgot the name, but we have emission control norms. Same way in the European region, they have EO6, and now they are going to EO7, which is going to be 2027 requirement. And that is where they expect the SDA consumption in all the auto companies will go up by 50%. And and that's where they expect more rapid jump in SGA. Okay, and this is predominantly good product because there are multiple companies in the SGA segment, not in India. And from India, we have only one company, this is Tatva Chintan. But in Chinese as well as the European sectors, there are multiple SGA producing company. But the quality of SGA which has been produced by Tatva Chintan is far superior than those of the companies. So that's the reason it's more like a duopoly in the auto ancillary automobiles company. The third segment which I wanted to talk about is electrolytes, salts. This is the similar segment what we have in amino organics, where they provide the electrolyte solutions, kind of salts. But here, predominantly, this salts is not used for the lithium-based batteries. They produce the salts which is used predominantly in the zinc as well as nickel-based batteries. The thought process over here is the hybrid cars which is going to come in, where the demand is going to rise, but I'm not sure which sector is going to pick up. Is it going to be hybrid or is it going to be only EV? But let's say we say right now we are in a unknown zone, where both the cars pick up, either EV or hybrid cars. They will require batteries. But the batteries in hybrid cars are smaller because the 50%, or let's say little more than the 50% of the space is being used for the other source of energy. So they have a more smaller place as compared to the only EV cars, which predominantly hold only battery. So in that case, they have to use higher density batteries. And this higher density, what I mean is within the small space, the more energy absorption can happen. And that is where we talk about zinc-based batteries. So zinc is predominant, is used because it stores more energy than the lithium. And that's the reason they think that in future, if at all it's the hybrid cars are going to come in, which is predominantly going to be zinc or nickel-based batteries, this electrolyte salts will be used to be a part of that battery composition. And just to note that these salts are not so much bigger part of the batteries. These are very smaller parts of the battery cost. So they just require good quality salts. That is where the same stuff, the AMI and Tatva are gonna be focusing around, because they just wanted to produce good quality electrolyte salts, which is gonna outstrip the demand and still be not so big issue for auto companies, so that they can avoid these kind of costs. Just to give an example over here, this is a typical EV battery cell which we have as a cost structure. This the cost breakdown over here is like 51% is only cathode, 24% is the manufacturing cost, 12% is anode, 7% is separator, and the 4% is the electrolyte. This is only 4%, and this is the electrolyte, and they are making a solution to help this electrolyte part. So this is similar for the all other batteries, as in this is not only for the lithium. This is more or less similar. Certain percentage would be more over here. There are certain percentage which is more over here, something like that. The cathode and anode, typically based on what kind of battery what kind of raw material sourcing which we have. That is where the percentage changes, but the electrolyte salts will be like 4% to 5%, not a big part of a battery manufacturing. And this space they are trying to capture. I'm not sure whether they are getting into sodium, but that's going to be my question, which I'm going to see for in conf call, because they predominantly mentioned that they are making Tatva Chintan is making electrolyte salt for the capacitor, supercapacitor business, and that is basically the zinc batteries. They are involved in the hybrid car makers, and they are typically used for hybrid cars, and this is what this is what we have for electrolyte salts. The salts at the same time, the another thing which they spoke about is in cars, in normal EV cars also, there are two batteries which they talk about. The first is the normal battery, and when you want a certain acceleration in the speed, the normal acceleration does not comes from the primary battery. It comes from a secondary battery, which is smaller battery, so that the life of the primary battery does not get impacted. That secondary battery usually are not made of zinc. Sorry, usually are not made of lithium. They are made of some other component, and that is where they are focusing around those batteries also. Tatva Chintan. That is what they have mentioned over in one of the conf call. The last part is the the pharma and agrochemicals and other specialty, where it is, so this is like a forward integration where they are seeing that this PTC is being used in agrochemicals, and so they also started producing agrochemicals. And agrochemicals, let me put in this way, the agrochemicals margins were not impacted that badly as compared to the other sectors margin of the Chintan, because they were able to produce agrochemicals at lesser cost than their average competitors, because they have the one of the backward integration like PTC basically. And that's the reason the margins were pretty much intact. And they were talking about in all the conf call that agrochemicals margin is intact. It's just the volume dried up, but the margins remains as it is. Uh, and I think the agrochemicals as a sector in coming this decade, it's gonna go big, very big, because there were around 22 agrochemicals which will go off patent. Maximum of the off patent compounds of agrochemical companies lies in 2024, 2026, and 2028, I suppose. I have given those agrochemicals off patent link over here, and you can see the agrochemicals and the market size of each agrochemicals. So this is going to be big space for most of the agrochemical companies, not only Tatva. It's going to be, so anybody who's predominantly looking into chemical companies, which is agrochemicals specialist, should go through this and try to pick up which chemical companies are picking up what kind of compound. I suppose Heikel is also getting very big in agrochemicals, which you can track over there. That's another stock which you can talk about. And why we think that agrochemicals is gonna go big in coming days, because that is what has been consensus call within major of the companies, major good companies in agrochemicals. Over here, this is the message which was given by Jubilant Ingrevia CEO, chairperson, that in terms of agrochemicals, the agrochemical sector is beginning to show some signs of improvement. The excess inventory situation is gradually resolving and volumes are picking up, recovering in pyridine-based products. We are optimistic that the steady recovery will continue over the coming years. This is what just one of the companies saying. There is another company which is Shivalik Rasayan. This is also very good in agrochemicals. It was lying down last for two years, basically not doing any conf call, no presentation, and suddenly it has risen up again. And you can see there has been fund action also happening in big HNI investors coming in at this particular space, and they have released the presentation after 2 years, where they're talking about their expansion in the agrochemical sector and enter into specialized segment of the agrochemicals. This is what Shivalik Rasayan have said after 2 years. Solar Active Pharma. This is another company where they are talking about fundraising activity, and they are talking about margin coming back to 20% in next quarter. So this indicates that the turnaround in agrochemicals is going to happen in either in Q3 or Q4. And if we are trying to buy, if the turnaround already happens and is shown, the prices will go inflated. That is what my thesis is. That's the reason we should take normally a tracking position of whichever stock where the trigger is just going to come in next quarter or the upcoming quarter, 2 quarters. And that is what my thesis is over here, that the trigger is going to come very soon. This is the solar talking about raising capacity. This is Punjab Chemicals. They are also talking about the demand recovery, and the elevated channel inventory is almost liquidated. Let me talk about, sorry, I forgot to mention about the inventory levels. So what happened after COVID, during COVID, most of the big companies who are into agrochemicals, who wanted the agrochemical products, so they have taken big orders. They have given big orders because they don't know what kind of situation will arise. And that's the reason there has been huge stockpile up in 2021, 2022, which was not getting destocked. So 2023 went as it is. Almost 2024 also went as it is, because the stocking of this bigger companies, of agrochemical companies, was huge. And now that stock is almost getting reduced. And that's the reason now they see a gradual recovery in agrochemicals. And most of the chemical companies, whosoever are dealing in a bigger compounds, and they require certain sourcing. If at all I am a company, I will take as much sources it could be, because that's how I will get price reduction and good heavy quantity in case of uncertainty. And that is what all the major companies did. So that's the so every company in terms of agrochemical sector, they have huge pile up of the stock. This is getting reduced drastically. And that's where all the agrochemical companies, along with the off patent, will get a big trigger in coming days. In Arihant, there was a Arihant conf call where Tatva Chintan was part of that. In terms of, we asked about the revenue potential of Tatva Chintan, and they said even in case of normal pricing, not about the COVID kind of pricing, they are talking about a normal pricing. They expect their sales to turn around between 800 to 850 crores. Just to note, what is the sales right now? The sales is, sorry, the sales is 371, 394, and this is the quarterly sales which has reduced drastically, and the margin. So they are expecting this sales to be, in case of normal profit only, normal pricing only, it should be go around 800 to 850, and which is going to happen almost in next year, because next 2 quarters, let's assume that the recovery is still slow. Q3 will reflect still slow. Q4 will be okayish, and from Q1 it will be very good, because normally the companies takes 2 years of inventory. So they expect, as in my expectations is based on what other companies have been saying, that so from next financial year, the demand will come in a very big way. And this is what the pricing. Apart from that, they mentioned that this is only considering the current assets. They have around 178 crores of another asset, which is capital work in progress, which will be coming and up, and that's does not include those kind of sales. Uh, so this, they have mentioned this exclude the revenue from new greenfield plant, which is gonna be which is gonna be coming online in coming years. That's the thing. And they have mentioned the reason why they will go very good. Here are some reasons. Peak revenue could be in range. They have mentioned the price stabilization. They don't expect further downside. Demand is going to increase in coming years. SDA, the Euro 7 emission standards are going to be implemented, and they have new customers which are going to be joining in all the sectors, basically pharma, agro and polymers. They have been controlling costs, and this way, this financial year 2026, we expect very nice revenue potential coming up. And this is not going to be the compounding story. It's more like all the stocks which are languishing in the sector, which has hasn't been moved, is usually give 100% or maybe 150% in next 2 years, and then it goes back to the compounding story or goes down again. That is the normal situation has been in case of this kind of stock cases. That's the story, and that's what I would like to end Tatva Chintan. Any questions around Tatva Chintan? The another thing which you can just see that we have a price. 1 second. This is how it is. So let me know if at all you have any questions about Tatva Chintan. This is the volume which I wanted to show, the volume spike which happened in between last 2 years. I expected it to stabilize around 1,000, but it did not, and it went to 843. I suppose this is the max pessimistic view, and that is where it is forming a very nice base. We have to track what's going to happen in next few days or few months, basically, before taking any big position over here. That's it.
So, yeah, thanks, Mithun. So there is one question in the chat. Auto space is not doing really well at this point of time. So how do you see the impact of SDA segment onto that space?
Auto space. So see, everything is cyclical in that way. So auto space, which has been not doing good, it will turn out good because people will have to buy auto companies, as in will buy the automobiles in coming years. And this is predominantly in the European region where the auto sales have been very bad. So, but the outlook which has been given by all the political figures is now good, and the political stability is coming in. If at all you follow the international news, and that's the space which should pick up. Everything can't be in downwards always. It will pick up, and that has been the history.
Yeah. So I would just say that see, when a lot of the things go wrong for business, right, the pendulum swings on the extreme side.
Yes.
And for the Tatva Chintan, I think we are on the extreme pessimistic side in terms of business, in terms of volumes, in terms of share price. I'm not saying that it might not fall from here also, but I think it looks like a good risk reward ratio personally as well. So, yeah, there is one more question on the chat, possibly. Okay, so it's just an information. Fine.
Mithun, just
So,
to add over here, it is not directly to auto, it is auto ancillary, right? If it is in the battery.
It is in the battery for electrolyte salts, but SDA is used for the auto companies in terms of reducing the emissions, especially the nitrogen dioxide. That is what they use. So there are two parts: SDA and electrolyte salts. So the salts part would go big if at all they just come up with in sodium base. That is what I'm trying to understand whether they're going to come up or not. But the emission thing, if at all, let's say everything goes EV, then they are just producing, from an emission point of view, they are producing SDA, and that will be used in other parts, because zeolites is something which is used for multiple places, multiple sectors. The uses are enormous in terms of zeolites. It's
Right. See, if I take the example of, not only the auto engines, but we have, generators, we have, many machineries where
yes,
could be the source of emissions, then it could be application to those as well.
true. But right now the major business is automobiles, and that's where I focused on. Every chemical company have their way out in some of the usage. As in, they try to figure out if it all not this, it will be used in this other parts. And the management quality is very decent. As in, so uh, they have not been shied up to say that things are bad, as in they have been very much clear in that way. And management, after many pressing questions in earlier, they gave a final figure of 800 to 850 crore. It was not in the very first instance that they said that we will do these kind of sales in coming years. We asked multiple times what is the future expectations, what are the potential, because the asset creation, the gross block has been heavy in Tatva Chintan, and they're still talking about expansion. So they might be seeing something which is gonna be far better as compared to what we can see, as in that is what my thesis normally is. And the only thing which I hope that I can see some promoter buying in Tatva Chintan because the prices are too low. So once the promoter buys any kind of companies which is in downward trend drastically, normally it forms a very strong base, and that's where the price shooting up. That's what happened in Motilal Oswal also. Prices were falling drastically, and at one point, promoters bought in, and that become a base, and then from that price it become 2x and 3x. That has been the case. So I see promoter buying, good quality promoter buying, not the notorious ones who buys and sells, but good quality promoter buying always creates a very strong base around the prices, and that's what I hope that I see this in Tatva Chintan. You can
Any
see in chemical,
competition
yeah.
do you see? Any competition do you see from peers?
No, there's no good competition in Indian market at all. There's no good competition. So in terms of SDA, you won't see companies talking about SDAs in general in any of the council. There are some companies, but the quality of the product of the SDAs are not great. So they don't get into competition with Tatva in that way. And SDA is like 42-48% right now. And PTC, so catalyst is something, it's a normal product which you can see, but they provide catalyst which is particularly related to quad ammonium sulfate, which is very few companies. Within China, if at all, there are some companies within China, if at all, they are able to sell it, try to figure out the kind of pricing and the kind of quality they have. That's one of the things. That is the same thing which you can see in Supriya Life Science also. They were able to sell the products in China. Even the prices were falling during the COVID. After that, when the things turned around, Supriya Life Science literally flight from 170, 165 to 700, 800. So think in that way. Yeah.
Mithun, I have one question. In terms of the electrolytes, which is used in the auto components, so the percentage of the usage is around 4% in the battery cost.
Yes.
And their market share is very less in the single digits, right?
Yes.
How much it is expected to get increased when the new emission norms get in?
So they talked about from 1% they will go to 4%. And this 1% is just their current figure from the sales. This is not from the total world's electrolyte salts. This is 1% of the total sales. This will go to 4%. The potential is of this. I will say that is not. My understanding is EV will be far bigger than the hybrid cars because EV will be cheaper than the hybrid cars. And in long run, I can see then the kind of companies who have been investing, they're all making out batteries based on lithium, be it Amaraja, be it Excite. So that is the only thing which, as in I can see. So if, and they have been very specific, they are not entering into lithium. But I wanted to know, and if the hybrid cars pick up in that way, I think this percentage will be small, but still it will be a good revenue doubler over here in electrolyte salts. The only thing is you have to see if at all they just went into sodium, then that's nothing. Then it's far bigger space. So from lithium to sodium, this is also going to be a transition, and already companies are talking about. So I'm looking out predominantly companies which are providing electrolyte salts for sodium, which I could not figure out as of now, at least. So,
okay.
So
but predominantly the revenue split still comes from the PTC and then the SDAs rather than the.
So PTC and PAC will be giving more than 50% ideally, because PTC and PAC are like both related to agrochemicals, and SDA is another which is around 48%, which will stay as it is. All these components are waiting just for an upcycle. Just once the upcycle happens, the percentage will remain same, but the amount wise it will be bigger. That's the scope, as in that's what I'm talking about. So because PTC and PAC will grow big in next 2 years, 3 years, you will see all the agrochemical companies will get showing very big numbers. And that's where the Tatva Chintan will also come in a very big numbers. And within that big number, if at all electrolyte salts, which is 1%, goes to very big number, in terms of percentage, it will be still smaller, like say 3%, 4% of the total sales. That is what my understanding is.
Okay, thank you.
But I will advise people not to take position just because I'm talking about, but think this as a thought process that chemicals in down cycle.
Right, Mithun, Deepak here. Mithun, when Tatva Chintan went on an IPO, the prospectus was very nice because the investment on the what do you say, the source of income coming from the IPO, they were planning to invest on a lot of R&D facility.
Yeah.
Right. So now, any idea about how has it been progressed? Is there any outcome references? These R&D facilities have what? Because I see one portion saying that they have a new manufacturing facility expansion in 2023-24 at Dahej SEZ, but no clarity is given in terms of what product portfolio was. I mean, of the 4 product portfolio mentioned, this manufacturing facility is for what?
So all the manufacturing facilities which they are creating, they are fungible in that way that it can be either produced for PTC only, or it can be used for agrochemicals also. At the same time, the same product can be used for SGA also, because everything is either forward link or backward link for Tatva Chintan. And they have mentioned in their conf call also that they can produce all the things, because all are fungible except for the electrolyte salts, which is a forward integration, but they can't do that kind of backward integration because the volume as a volume part is not so big. So, but you can see the over here, the fixed assets. That's
Yes,
where
the
it
investment
has
on fixed assets has increased. Yeah.
drastically, as in see, it's
Yes.
doubled up. So 160 went to 427, and here we have 140. And at the same
Right.
time, the debt has calmed down, as in the
Calmed
debt
down,
is
yes.
drastically. So any company which can go as a default is because of debts only. So if at all the company which has these kind of assets and the debt is only 15 crores,
Yeah.
so it won't die, as in, and that's the lower, the downside risk gets fully protected in that way. That is the reason I'm going towards the running towards chemicals, and this is that's the reason I'm advising people, as I'm not advising, I'm just telling people that look into chemicals. You will see enormous growth potential in coming up in chemicals, because it's in a pessimistic view. It's very pessimistic.
Right.
Nobody's talking about chemicals. Everybody's talking
Right.
about defense. Everybody's talking about manufacturing companies. These kind of things, and this will also generate returns. There's no doubt about it. But it's like a crowded place, and
Okay.
so, and it's already expensive. So now I've seen the phases of the momentum. They want a story to build in. Initially, it was an order book story. Now, which is dropping down in terms of the execution, they are looking into the execution. They are looking into the profit. That's what happened in solar theme also. I also played very well in solar theme. Because of Puneet, as in I really appreciated that. So that's what happened in solar. Now, so look into companies like Oriana. Let's say Oriana will do fantastically well, as in the sales, the order book is fine, but the stock price is not moving up because it's now a crowded place. Everybody has Oriana seats like that, and that's the reason the incremental flow is not happening. And here the incremental flow is not there. There is no flow in chemicals. So look into the chemicals in that way, and that is how you play.
Right. I have 2 more questions. Big one is about what Mr. Shekhar had highlighted about the relevance of auto industry, because SDA accounts to 42% as per their 2023-24 annual report. So now you see the industry shifting to EVs and hydrogen. So, and though you may say the large the heavy duty vehicles may still be using the fossil fuel, but what kind of percentage are we talking about when the company is having a high dependency with respect to business revenue coming from this SDA business?
So SGA is used not as a SGA as a product with something. SGA is used as a creating another product called zeolite, and that
Correct.
zeolite is not being, which is used predominantly in many sectors. It's not only automobiles. So they will find some other uses. But right now, I'm not saying. So let's say next 2 3 years, you don't see that this lithium-based batteries, cars, or any other sources of vehicles will come in on roads. I'm talking about next 2 years only. You can't play any companies for a decade now, as in it's gone. Now you play for 1 year, 2 year, take the position, then rewrite the position. If at all you think another next 2 years is gonna be good, and that's how you're gonna roll the position. I'm not gonna play this stock or any company in my portfolio right now for a decade's point of view. Let's say buy HDFC Bank, Asian Paints, दीवारों पे color लगते रहेंगे. नहीं, this is gone now. India, the stock thesis in India has moved very, very ahead than this.
Okay. And in the report, it is said that electrolyte salt revenue declined 70% year on year due to poor offtake in Chinese market.
Yes.
So I understand that the heavy dependencies on the export.
Yes.
So any idea what these as Chinese market, I mean, customers are sourcing, are they sourcing any alternative products, or is the shift to a different suppliers?
No, Chinese market has been falling down in that way. They are coming up with new cars, but the saturation level in terms of in terms of electrolytes, let's say in terms of EV cars, they are very much saturated now. So all the new EVs are gonna come in non-Chinese market. So it's gonna be
No, I
European.
can understand. I can
Yeah.
understand when we talk about the upcoming annual report. This is
Hmm.
an annual report of 23-24. So the
Okay.
last 2 years, if you see 23-24 will reflect the previous year. Okay.
Uh-huh.
So if you see that timelines, the companies like BYD, Geely, all
Uh-huh.
these companies had a very good export shares
Hmm.
across globally, so I mean, we can see that sales also went up. Now it's 2024 current situation. Yes, it is on the decline, but during that peak time I still see a 70% year on year drop. That is 22-23 to 23-24 we are talking about,
SDA.
right? Not
You're,
SDA. It's
Hmm.
electrolytes salt. It's in, if you want precisely, I can tell you.
Yeah.
Um, it's in page 12 of the last year annual report.
I have to check. I will have to check. But electrolyte salt has never picked up in that way in the bigger portion of. I'm saying it's going to pick up in coming years because of
No, not pick up.
European.
It is
It
not
has
pick up.
fallen
It is
down.
reduced by 70% compared to the previous year.
Yes,
So
yes.
if so, that way I'm trying. If is there a shift in the whole industry? Why Chinese companies has reduced by 70%? I can understand 10-12%, but 70% is a huge one, right?
No, no,
So I
but
just want to know, is there a shift there?
no, but 70% of what? So from 100 rupees, electrolyte salts were already composition of 1%, 2% of the whole Tatva Chintan business. So 70%
Okay.
of from 100 rupees of 1%, 1 rupees or 2 rupees will be how much in terms of total business? I give you 100 and I say from this 2 rupees I reduced 70%. And then the rest of the things are also falling down, but this is fallen down by 70%. Will it impact that much to you?
Not in the overall.
Not in overall, right? As in that's what it does. And I have to check. I have not seen those parts, but my thesis is electrolyte salts will pick up in coming days because of the hybrid cars, which is yet to pick up in the European region, and the kind of more electrolyte salts usage where they're going to use, as in what kind of electrolyte salts going to come in. Let me give you a brief over here. See, Ami, when I talked about in 1.5 years back electrolyte salts, they were talking about it, nobody picked up. And this quarter, it will come up as a big jump. And that's the reason you see AMI organ is moving up. So electrolyte salts, even though I'm talking right now for Tatva Chintan, it's not going to come up in 1 quarter or 2 quarters. It's going to come in after 6 months, 7 months, or maybe the Q3 of next year. As in, that is what is going to happen. And that's the reason I'm taking the position right now. And that's how I play. As in, that's how I play with the downturn sector. As in, because I wanted anything which is seen as next quarter or coming 2 quarters is already priced in stocks. Most of the big investors have already taken big positions. When you play in the down cycle, you have to play in, let's say, 1 year forward in that way. And that's where I talked about Tatva Chintan is going to be good for next year fiscal year. FY26 will be good for Tatva Chintan. That is how I'm playing right now.
Okay.
Okay, so you play in that way, and 70%. As in, I will read about it, but it won't change my thesis because that is hardly a matter for me right now because it's very small. If it all electrolyte salts were like 50% of the whole business, and it will sell it to 70%, then I will be big concerned. But I see upswing is very big right now rather than downswing at this potential. And I don't have the answer for that particular 70% fall right now. If it told you ask.
Yeah, yeah, sure. Okay, so rest of the questions we'll take in the chat and interest of time. I think we have covered it well till now on the Chintan and few of the queries that we had. So we should move to the next presentation now by Rashmi. So thanks once again, Vikram.
Thank you, Puneet, for giving this opportunity. And I look forward to all the presentations, and I look forward to all the questions as well. So let me know if at all you have any queries to any other companies of related to chemicals. We can just discuss it out together. Okay. Thank you. Appreciate it.
Yes. Put more questions in the chat or in the WhatsApp group. We will take it there. Yeah, Rashmiji, you can take it
Yes.
forward.
Thank you, Mithun. It was a wonderful presentation. Puneet, can you make me host so that I can share?
I have done it before. No? Okay.
I think I'm already given the access here. Yeah, happy morning all. This is Rashmi Patil, and my presentation will be on the sector cables. Just give me a moment.
Yeah, we can see that. You can move to the presentation mode.
Yeah. It's visible now.
Yes, please
Yeah.
go ahead.
I'll be presenting the stock called Paramount Communications Limited, but whereas its stock code is known as Para Cables. It is the sector is from the cables itself. When we talk about why Paramount Cables, I mean Para Cables as the stock code, whereas the stock name is Paramount Communication. The company has been widely adapting with present situations and the demand. So initially it was Paramount Cable Corporation and then renamed as Paramount Communications Limited. The journey is quite interesting. The company is 70-year-old, comprising of 4 generations by now, 3 to 4 generations. It started in 1955 and it just initially it just produced, I mean, manufactured only the housing cables that we required as electrical cables in our home. So it just started for that purpose. And then in 76, it introduced the PVC telecom cables that was required for telecom industry. Then in 83, the second generations jumps into. Then 85, it becomes the first cable manufacturer of XL counter cables. Then one more. It's interesting that why the family matters here. At the end, I'll be telling it. So one more person jumps into, and here 2007, they acquire AEI cables. This is the major turning point for this company, that is 2007. At the same time, 2008, they come roll out the lead-free wires, which are unique to this particular company, unlike the other companies who are its peers. And then 2010, they are from 2008 to 2018, that has been a very bad phase, but none of their family members take up any other job or any other business. So the third generation also jumps into. And 2015, as I said, like the family members come into the same business. And 2019, they take a submarine cable repairing project. Then here 12, they started manufacturing fire survival cables, which was again unique in its kind. 2016, solar cables. Then here cable repairing project, and exports were up to 50%. And finally, it was just a one, I mean, until the second generation also, it was overall 1 crore company. And you can see here the turnover was only 1 crore. And whereas in, 83 and 2024, it became a 1,000 crore company. Yeah. Okay. How the company has been evolving and adapting. You can see here, 55, it just became a household house wires it was producing. And here it became the PVC cables. Then 85, it just started adapting to the demand of the market. Whatever was necessary, it started producing its own kind. They are also into R&D, and they are also producing the unique cables, which are not common with other companies who are at space. So year by year, you can just see the progress, like what exactly it has been producing, and till date, how the revenues have been affected, and also exports have been improved. So till FY20, the overall export was 260 crores, and FY24, only matter of 4 years, this has been the export size of this company. And this is for local market. This is outside India. I mean, exports, sorry. And this is the number of distributors in USA. I mean, the whole company mainly right now, till now, exists based on the exports they're doing to the US market. So this is the US 260 crores, and till now, in 4 years, they have acquired up to 2761 crores. Whereas the distributors who are only 2 distributors in US, now they have 8 distributors. And again, this explains the same thing, but they have their base in Haryana, Punjab, Rajasthan, but mainly their capex is Rajasthan and Haryana. Here, what was started as 1955, they started as a micro enterprise. Today, they are almost collaborated with every possible sector. You name it, like renewables, telecom, roadways, I mean infrastructure, everywhere the cables are required. And parallelly, they have made their exports very strong, particularly with US. And there has been a downfall of 10 years, and that's the reason why the promoters pushed into 128 crores and why the promoter holding is less as of today. And overall, their kind of products that they are producing 25 different products, and holding 2,500 SKUs. This explains the, almost summarizes the whole thing, the whole family business, and the kind of growth they have made. And number of company shares, what were before, what were now. Like here, 2007, it backs its first 120 crore order, whereas in 2002, it declares the first dividend of 1.2 per share. And again in 2004, 1.5 million from Sri Lanka, the order was bagged, and 2005, 1.5, 8.1 million from NDPL, 55 million from Indian Railways. I mean, they were good at acquiring the Indian market. 2006, again they secure 200 million for power cables. 2007, again this is the major turning point. 2007, they acquire UK-based AEI cables. This is the same company, UK-based. It is even older than Paramount, because Paramount is 70-year-old and AA is even older than Paramount. They were in debts, and this company, which was almost unknown among the same sector, they bought it by cash. So this was the major turning point in case of both export as well as making their name outside India. And up to 2008, they also gave 20% dividends. But from then till date, there has been no dividend, because the company made huge loss because of the downfall in 2008. And for cables to be produced, the copper, the metal industry had fallen, and they had to pay huge percentage for the acquiring the raw material. So, and overall, they went almost in too much of debt from 2008 till 2018. But their R&D or the kind of producing, it has never been down, and neither the downfall of 10 years shattered the family. So 2014, again, it bags 207 crore from National Optical Fiber Project, and 23, it acquires 1,93,000 equity shares of Valence Technology Private Limited. These are the kind of cables it produces: the power cables, aerial bunch cables, and for telecom, it produces optical fibers, jelly-filled cables, and there are special cables for thermocouple, solar cable, railway, and for fire survival cables. These are the unique, the special cables are unique to this company. And here are the clienteles. The major, before the company was B2C, it was only to business to customers, but now it is B2B. So ABB, HP, Ultratech, BSNL, all well-known companies and all major government companies are its clientele. Indian Oil and Mahavitaran, Godrej, Adani. So all major companies are in collaboration with, are the clientele of this company. And the company has bagged a good amount of awards. And the last award was given as Udyog Ratna Award in 2019. Speaking of the strength and weakness and opportunities of this company, first of all, the strength is since 10 years, it has worked too much on its revival. Hence, now it is completely debt-free and almost debt-free. And company has delivered good profit of 23.8 CAGR in last 5 years, effectively using its capital to generate profit. Hence, the ROC is improving since last years. Also, asset to generate profits. This has improved the ROA, that is return on assets, improving since last years. Everything is, why I'm comparing only 2 years is, the major turnover is from, the complete, they have taken a U-turn in a positive manner from last 2 years. So annual net profit is also improving since last year, and also book value per share. But what are the weaknesses is, stock is trading at 3.5 times of its book value. The reason being very obvious, because they are repaying their debts. Promoter holding has decreased over last 3 years, that is minus 13%. Why? The reason is, promoter holding was up to 62% just 4 years before, but since they revived themselves, they came back, they were almost termed as untouchables. I'm not using this word by myself. This was used by one of the promoter himself in the con call. They were almost treated as the untouchables by the banks, and no bank was giving them any loan for growth. So they were, in terms of capex or in terms of acquiring any other company, they had almost gone down. So the promoters infused their own money into this since last 2 years. Hence, from 62%, it has come down to 49%. Declining cash flow from operations and declining profits, just because everything is pushed into clearing their debt. When if we consider the competitors or the piece of this company, RR Cable Limited, it is the one who has the maximum awards, who has bagged maximum awards, and other like we are, if you are already into Puneet's this one, we are already invested in one of the companies mentioned here. And when we compare the share value, it is right now 79 since yesterday's poll. It is right now 78 to 79. And whereas its peer, that is the Polycab, which is a major, bigger company compared to this very giant company, its per share value is 6948, whereas KEI Industries, it is 4254, and Finolex is 1100. And if we compare the market cap of Paramount, it is 2,456. Rather, it was only 1,200 crore till 4 years before. Now it has doubled. So 2,456 is the market cap of Paramount, whereas Polycab, you can see that it is more than 1 lakh. K, it is 40,000, and Finolex is a 16,000. So in terms of market cap, naturally it is a very small cap company, but doing wonders, as I explained further. And why this company? When I compare with any other company, why this company? You can see that Paracables is this stock name, the registered name, the stock, listing. So you can see week-wise, month-wise, year-wise, and 5 years growth. So if you are invested in this, there is, 1 year, if you compare the last year, naturally, there is a huge fall. But if you are invested in this company since 5 years, you can see the growth, 97% is the return. Whereas the other company, Prewire, Unicables, DYCL, or Salzer, and Salzer is the one which has given 1281 return, but compared to any other company, it stands again the second biggest in giving the good returns in last 5 years. And coming to fundamental ratios, here I said like past 2 years, they were only, every single penny of their family and as well as whatever they have done, it was in clearing debt. So naturally, when you take out the average, it is less. But if this year is concerned, then the sales growth has been up to more than 31%. The profit also has increased to 78%. And if you take again 5 years, it is less. And ROE is also given good ideal ROE, what we look for any company. And ROC is also almost near to 15%. The debt to equity ratio is 0.16, and soon they'll be clearing this also. Price to cash flow, because they were benefited with not paying the tax because the company was in huge loss for 10 years. But since 2 years now, they are paying the tax also, and they are paying the clearing the debt also. So naturally, the price to cash flow is negative and the PAT is 0, because profit after tax is not expected as of now. This is the promoter holding, that is, I said 49%. If you look into the 5 years, the promoter holding was up to 62%, which has come down to 49% just because they have infused their own money of like 128 crores into the company. And public holding, that is, if the promoters are holding 50% and we retailers are holding it 50%, and FII is 2.21%. Initially, there was DII invested, but now it is not there. And when we talk of quarterly sales, this year, if we talk only of profits, overall share value, then you see the difference. But when you see the net sales, so quarter by quarter, you can see that 250 crores in September, whereas it in a year, it is 352 crores. And when you come to profit before tax, it is good, that is 19 to 29, but profit after tax is also 19 to 20. So overall profit and loss, if we consider, net sales is from March 2020, 606 crores, whereas look at now, that is after 4 years, the overall net sales is 1047. And operating profit in March 20, that is 4 years before, was 44 crore. Now it has almost doubled. And profit before tax, yes, that is in 2020, it was in a very bad phase, recurring phase. So it was 26. Now it is 81. And overall net profit, you can see in 4 years how much there is a increment from 26 to 85. We can overall compare of 5 years. What is the overall growth of this company? So compounded sales growth is in last 10 years, it is 10%, whereas 5 years it is 11%. And if we compare of only 1 year, then it is growth is 42%. And compounded profit growth, if we can compare with, take the average of 10 years, it is 12%, whereas this year itself is 56%. And if we compare only 3 years, then it is 202%. Stock price, this CAGR of this company, if we compare, then 10 years, it is 42%. And 1 year, if we take only last year, then it is minus 15%. Not to go with only 1 year, I said, like, if we consider the consolidated growth of this company, then last 3 years it is 73%. And return on equity, it is 10 years because they were in a huge debt. And if we compare 15 years, I mean, last 5 years, it is 14%, and last year it has given 18%. And you can see here the revenue is naturally increased. The year-on-year revenue is 52%. EBITDA is also 61% growth, and the PAT is 74%. And how do, I mean, what are their, I mean, out of 25 products, different products and different sectors they are working into, different cables they are producing, their major revenue is from power cables. That is, quarter of FY25, you can see the major revenue is 1,203 crores from the power cables. And if we talk in terms of percentage, it is almost near to 40%. And the next major growth is railway. I mean, this is of Indian market. I mean, that is 20%. But another major contribution to this company is by exports. This will be explained in detail why the export is playing so much major, I mean, how it is helping this company to make a base. And when we talk of revenue, when we talk of revenue, you can see the quarterly results here from quarter 1 FY24 to quarter 1 FY25. That is a 1 year growth. There is a major difference. EBITDA also has grown from 8.5 to 9.2. Profit after tax is 6.8, but yes, they are still, I mean, just reviving themselves. So 6.8 to 7.8. And you can see here this continuous scaling up of order book. In Q2 FY24, their order book was up to near to 4,000, and now it has increased to 6,000 crores. So, and whatever is marked as blue, I mean, this color, it is their major contribution. I mean, the revenue is from power cables, and all other things. I mean, this export is the other major export is, I mean, revenue is from exports. Just as I mentioned before, 2007 was the turning point. This AA is the oldest company of UK who is into the same business, and these people bought it on cash. And in 2020, and after that, जैसे वो कहते हैं कि नजर लग जाता है, like the moment they acquired it, they also gave 20% of dividend and everything. 2008. Also, there was, I mean, there was a already global fall, and that affected this company because the raw materials was not at the rate they were expecting, and also the export part, which contributes to almost 40% of this company's revenue. There was no demand for the company's products, so everything was halted, and they ultimately had to sell this AI company after 10 years. And how this company helped them is, first of all, in UK, they made a base in UK after acquiring AI company. And it had already set its brand name. And these people were able to supply and maintain the same standard as this company, and then have the good export. So US market is from last 4 years, but whereas this UK market and all major Europe countries is from 2007. And this company had almost 300 employees, and also the salary there is high. So they always, Paramount has really maintained a standard in delivering any kind of business, and as far as the products is concerned, the quality products is concerned, and also the ethics is concerned. So they were paying the same salary that was expected there, and they had to maintain those 300 employees. And finally, until and unless they get a different base. They maintained this company and ultimately sold it. But the name they made after acquiring this company, the exports, the everything that improved, this was a major turning point for the company. And recently they acquired this all the shares of this Valence technology, and in September 24 they had pledged some shares with this company. So this much of 1 lakh 1 crore 27 lakh shares has been taken by Purse Electricals. Now coming to technicals, you can see I just took this month wise. You can see here 2008, 2007 they were in still a very good condition. 2008 was a major fall, and that affected very badly because they had already taken the EI company. They had given the dividends. They were making good profits, but you can see the downfall of from 2008 till 2018. Exactly 10 years they suffered like anything. There was hardly any growth, and it was almost on the verge of closing. But 2018 onwards, they started working on what can be done, who are our major. They did not stop there. They looked into the US market and everything, every possible local market. So from 2018 till 2022, they made a major contribution by pushing into their own funds into the company. The promoter holding reduced here. And finally, the company growth from last year, that is 2023, you can see the growth, like where there is a complete stagnancy in this 10 years. Here, 2023 onwards, the company has hit the all-time high of 116, and right now it is trading at 79. And if I consider day-wise, here is the growth. So you can see there, no growth for almost 10, 12 years and huge growth and continuous growth now. And this is my analysis. As far as I see, I do see a cup and handle, and this last candlestick is also a hammer, and that too at the downtrend. So naturally, this is a bullish hammer. From here onwards, the company is ought to go up because of not just because of the technical part, because of the ethics they are maintaining, because of the growth they are focusing, and everything they have set, like their base is very strong, their exports are strong, the collaborations with other people outside India is very strong. So right now it is trading at 78 rupees, but and the all-time high is 116. I do feel there is a fair chance that it can reach up to 112 to 115. Sorry. If we compare the growth triggers, strong market demand is there. The company expects 25 to 30% compound annual growth. I'm not saying that this company will multiply as 2x, 3x, 3x in 10x in 5 years, but naturally we can see 30 to 50% growth in coming 5 years. And it has cleared all its debt-free balance sheet from particularly this September. They made the first con call after so many years. And expansion into US market, this is the major turning point and profitable thing for them, because 40% of their revenue is again from the US market. And industry tailwind demand is likely to outstrip supply in both export and domestic market, because they are not because their US base is very strong now. 40% is already set. All they are looking is again back into the local Indian market where they can expand. And investments in various sectors. The company is such that there is never, the demand can never come down, because it is sectoral interdependent company. If you talk of solar, you need cables. If you talk of wind energy, you need cables. If you talk of railways, again, cables are required. Housing, because the government is pushing into housing, infrastructure and everything. So when you talk of housing or infrastructure, cables are required. Again, commercial and residential infrastructure and more. So what are the challenges and headwinds of this company? First of all, as I said, like since they are paying their debt, the PAT growth is, I mean, profit after tax is low, and the company is cautious about the potential fluctuations in raw material. The reason when they collaborated with US and the lesson they learned after 2008 crisis is that they were taking the, I mean, dealing with their raw material companies without any time limit. But now they are sticking on to only 4%. I mean, sorry, 4 months. Because anything beyond that, I mean, 4 months, once the price is fixed, nothing, no fluctuation in market is going to affect this company. And companies at disadvantage with respect to countries like South Korea, Vietnam, Cambodia. I mean, with present US market, with present election, present president, the disadvantage with our country is we are supposed to pay 22% of tax when we export, when the US imports, I mean, the Indian government is also taxing us. But whereas the company, I mean, countries like South Korea, Vietnam, Cambodia, Mexico, all these countries, they are paying zero tax. So we are paying heavy and they are paying zero import duties. So if there is a rule, particularly with the US, if they are ready to impose 10% on every country, irrespective of from whom they import, then Paramount is going to sustain. I mean, make gains, not sustain. They are already sustaining and doing good. They are going to make growth compare when the other countries are going to be taxed equally. And tailwinds is, as I explained, the 50% revenue is from the power cables, 10% is from railway cables, and 40% is from 30 to 40% is from exports. The current breakup is like branded versus unbranded. Right now, what goes in market is, matlab, chalo koi bhi chalega, like koi bhi brand le lo, bas wiring kara lo. This kind is happening like 72 people, I mean 72% go for branded and 28% is for the unbranded. But this is soon going to be changing in FY27. That is 80-20%. Branded will be expected 80% and unbranded is 20%. So this is also going to give a good gain to this company. And how other things like any growth in economy, how it is going to directly or indirectly help this company is current power generation is 405 gigawatts, whereas it is expected to go to 620 gigawatts by 2027. That is sooner in 2 years. Most of the incremental capacity is expected to come from renewable sources because government is focusing largely on renewable sources. So this is also going up from 80 to 190 gigawatts by 2027. So the power generation, the renewables, they are making growth. This directly involves, this directly gives the more expansion into the Indian market. And also the cable overall, it's not about Paramount. Overall, the cables and wire industry is expected to grow from 290 billion to 430 billion by 2029. And talking about other tailwinds and business, as I explained, government is largely focusing on National Housing Commission, railways. You are seeing like the new lines are led and more trains have been, apart from not just high speed trains, but many major difference, improvements are in the railway sector. And projects to enhance inter-regional grid connectivity means even though the road is also led, then also you need wiring because you need that electricity to go along with it. So emerging industries and their ecosystem. So overall, the whole wire industry and cable industry has grew by 14% in last 2 years itself. And this company is exporting not only to UK and US, overall it is exporting to 25 countries. That is including all the European countries, Africa, Australia and US. So it took them 5 years of extensive approval for this. Like, you know, when you're supposed to export, then there are huge paperwork that needs to be done. So they were largely from 4 to 5 years, they were largely focusing on making their base in these export and particularly US market. And the company raised 275 crores from the investors in last FY 2024, 2024, and company is now debt free. Paramount intends to grow its top line, that is CAGR, from 25 to 30% in next 5 years with major thrust on US markets. I said, like, they were only 2 distributors before, now they have 8 distributors. Before it was 276 crores, now it is 1,200 crore business there. So in Q2, domestic sales were 280 crore. It went up to 38%, led by power cable itself as 80%. I said the major contribution is from power cables, and in this contribution is 80% is from power cables. And export sales was 69 crores in Q2. That is grew by 49%. And talking of H1 financials, revenues, you can see that's 677 versus 463 crores. That is up by 46%. EBITDA is up by 52%. Profit after tax is again up by 32%. And domestic sales is because they were hugely, largely focusing on exports, but now in H1, the domestic sales also have gone up by 57%. Exports, again, it has increased by 25%, and capex incurred in H1 is 62 crore. So overall, out of 677 crores of sales, B2C sales is 56 crores, and this is steadily going to grow. As I said, the massive infrastructure build and any renewable energy, everything involves cables. So they have a good future. US company has tied up with number of distributors, that is 8 distributors as of now. So these distributors sell their products to retail customers and their US business. So this market is very much in a good terms with Paramount. And it is yet to grow. And not to mention that, like, the US market growth is more than the local growth. I mean, whatever base they have made in US, the revenue is more compared to the local market. And when we talk of growth beyond FY26, then right now their present order for H2 itself is 1800 crores. That what they have order book is 1800 crores for the H2. And they are also planning to put up a greenfield facility. They already have 2, that is one in Rajasthan and one in Haryana. And this is, they want to expand now, and they are looking, but it's confirmed, I'm not mentioned here, but it's confirmed in December 2025 that Madhya Pradesh have already allotted them land. And this year, the company intends to go for 500 crores of export sales. They have already, out of 500 crores, 190 crore is already done in H1. So overall, if I have to conclude the company's performance, if it is like the current market capitalization of this is like market cap is 2,244, but the order book is 3 times more of this, 3.5 more of this. 52-week performance is 116, and as per technical analysis, I do feel that 112 to 115 is easily achievable. And annual growth of this company, revenue growth is 32% in last 3 years, and CAGR is 27%, and it is debt free. These are the good things about the company right now. And I have to summarize it, then these are the financials. First of all, the revenue from operations grew from CAGR 27% from FY21 and FY24, despite the lack of working capital, because they were lacking the working capital and they were not getting any loans from the banks. Yet the CAGR has gone up by 27%. And the turn negative EBITDA margin from 4 point, you can imagine where is 4.1, and now there it is, EBITDA is 9.4. The order book right now is 6,193 million as of the Q2 FY25. Out of, I mean, if you talk of only present, I mean H2, then it is 1,800 crore. The net fixed turnover ratio stands 6.3 times in FY24. Continuous reduction in debt, because I said like they were focusing on making the company debt free, and they have infused their own, I mean, promoters are infused their own money into it. So it's almost debt free company now, and return on equity has increased from 1.7 to 14%. Just as I said, like last year, if you see the overall growth of the company, then it was in negative, but now they have turned it into 1.7 to 14%. Here you can see the industrial growth. Indian wires and cables, if you talk, and talking in billions, then FY19, how much it was, and FY29, what will be the expected growth. So 1.7 to 11% increase. And organized market share in this industry, here it is, I said like branded and unbranded, right now it is 72 and 28. So 78 and 28. Here it is like the branded is going to go up and the unbranded is going to be reduced to 20%. And who are their major, I mean, clientele from which sector? That is power generation. Here it is going to, the power sector itself is expected to grow from 404 to 620 gigawatts. So any major growth in this sector will directly benefit this company. And a number of data centers, again, anything is like data centers are also growing now, and any major growth in data center, that is 2022 it was 138. Government is focusing to increase to 183. And infrastructure plan, naturally it is 20 to 2,511 lakh. Housing for all schemes, because government is very much focused on this. So here it is 28 million growth. And highest union budget this time, there is a highest union budget for railways. So this anyhow railways directly contributes to 20% of the revenue of this company. So since this year the budget has been increased for railways, the 100% the company is going to majorly benefit from this particular railway sector. Yeah. Overall, if I have to say, as I said, the PAT, the profit after tax is reduced just because the promoters had to push in their money, and they were benefited all these years for not paying the tax because they were into loss. But now they are making profit, so they are paying the tax, and naturally the PAT has been reduced. Promoters, if you take it as a negative thing, promoters holding is less just because they have infused their own money in sustaining this business. And when I compared the US market, US market in FY22, it was only 138 crore. In FY23, it became 400 crore. FY24, it became 276. Why? The reason is, first of all, US until 2029, it was importing majorly from China. But after 2029, there was huge, politically and also business-wise, there was a difference, and they started looking for other countries from whom they can import. The US market itself is 47 billion crore, and out of which 30,000 crore they import. And in this, Paramount has already made a good name in US market and having its 8 distributors, and it is going to increase. So US is the major market for Paramount, and they have reduced from China the increase from India. And as far as capex, I told 1,800 crore is already pending for the H2, and it is from the 2 plants, and 600 to 700 from the next greenfield capex they are focusing, and already Madhya Pradesh has already given them the land in December. I mean, this has been finalized. And overall, they paid dividend up to 2007, and now they are only focusing on growth. Hence, there is no dividend as of now. If and only if, like US, if it taxes the other countries like Vietnam, South Korea, and Mexico, then the terms of profit will be more even compared to its peers, as well as compared to overall other country people who are into the same business. Reason why I selected this company, this time I invested in this company even before presenting this. First of all, it's a 70-year-old company. It is a small cap. Small cap naturally has a bigger growth compared to large cap. Last time my selection was an SME. This time I thought like not to go for any SME. I made sure because I want everyone to invest and it should be very feasible. Also, the share value is less than 100. So it is one of the stock for those people who are looking for share value less than 100. And when I talk about the company base, not just because the share is less than 100, so we need to go for this. Just because the family values and the ethics they have maintained, they have 4 generations have been into the same business, and none of them moved outside the business. So the family is very strongly into this, and business growth is very much bright when we compare the last 2 years. And in spite of everything, if every sector grows, Paramount is bound to grow. So this is the reason for me to select this. And now I'm open for queries. Thank you.
Very good detailed presentation, Rashmiji. So one
Thank you.
question from the chat is, do you see the inventory is piling up because of less demand, or it is because of bigger order book?
1 second. I'll just open the chat. Can you repeat the question, Puneet?
Yeah, so question is, inventory is little bit higher in the last few quarters. So is it because of a lower demand in the industry, or it is because of higher order book they are piling up the inventory to
No,
serve?
first of all, the company itself, they never focused on the local market. And the demand has grew, and now they're falling short of the stock itself. So this time they are the reason for them to increase the greenfield capex is also the one of the major reasons for this. So there is no, I mean, it is not going to impact the liquidity.
Okay. Sure. Any other questions from the participants? We can take one or two.
There is one more. The same question that is extended as: are there any challenges on the demand side other than economic slowdown in infrastructure? First of all, I said that this company, this sector is very much interdependent with other sectors. So any other, assume that one sector is going down, the other sector is going to contribute to this. So none of the reason can bring this company down. I mean, I'm not very particular about this company, this sector down. Because if infrastructure goes down, but yet the railways has been allotted the maximum budget, so that is going, and that is anyhow contributing to 20% of this company's growth. So it's not just about like, even if their roads have been laid, that then also the housing commission. So at least coming 5 years, there is a very bright growth for this company.
Yeah, so wires and cables is a sunrise industry that way. I align with you.
Rashmi, great presentation. I have one question on the. You said that promoters they have sold their stake and reduced the debt. How they reduce the debt of company by selling their stake? I'm missing point on this.
They were majorly like holding whatever Yes, they put their own money into this, Shrikant. For they have not sold, sold their any kind of capex major manufacturing points, but whatever they had personally, they have pushed into it. And also they pledged their shares with other company that hurts this one. From that also they have taken, they sold that AEI they were holding for all these years. That also they sold off.
Okay, but how the debt of the company can get reduced? It is the debt is with the banks, right? He must have taken loans somewhere, other debentures or something. So how that got reduced by what means?
Overall, first of all, overall number of shares of this company is approx 30 crores. I mean, in that 12 crores they have pledged with Hertz. So they were able to generate cash that way also, and their own money. And I just need to dig in more, like where they got it. And they closed the AAI company. I said, no, it was like from 2000, it was a major turning point, but at the same time, it cost them heavily because they were supposed to pay the 300 employees and at the same price that was mentioned there. So they closed off that company, or they sold that. They sold that.
Okay, okay.
Okay, so thank you, Rashmiji. So we'll move to the next presenter, Ankit.
Thank you, Puneet. Thank you all.
Should I share the screen now?
Yeah, you can start sharing.
Am I audible?
Yes, you are audible.
Yeah. So today we will discuss about one mental model behind investing, that is capital allocation in businesses.
Yeah, first, we are not able to see your screen yet.
Just a second. Is it visible now?
Yes, now it is. You can move to presentation mode. Yeah, and you can start.
Yeah. Today we will talk about one mental model behind investing, which is called capital allocation in businesses, and how a proper capital allocation in any business can change its future, can change its fortune if it's going bad. Let's say, suppose a company is working in 2-3 different segments, and one of them is high margin business, the other two are not. So if the company allocates more of its resources into that high margin business, this can totally change the company's margins and ROCs and ROEs going forward without doing much of a capex or without forward integrating much. So there is also one saying this by Warren Buffett. Over time, the skill with which a company manages or allocates its capital has enormous impact on an enterprise value. Another saying by William Thorndike is capital allocation is the CEO's most important job. Just like we do capital allocation in portfolio, we allocate more towards companies which we expect can do better in the coming time, and we reduce where we feel that companies won't do well in the coming times. The same thing is applicable in any particular business as well. Okay. And the company which I want to discuss, I'm just sharing the screenshot of the past few years profits and the stock price of this company, which I want to discuss today. And as you can see on the screen, you might be wondering why is this company interesting? Because profits have not gone at all. Now is the stock price moving anywhere? In fact, from FY19, the profit was 570 crores. Now in FY24, it has come down to 400 crores. So why is this interesting? And how can it do well? To explain this point, I will show you one case study from the past of one case study from the recent past of how that company turned around, and I think the similar model can happen in this company around here. So if you can see the screen here, This is one of those companies. Here from, if you can see the stock price of this company, in FY15 it was 23 rupees, and by FY20 around COVID time, even if you consider FY19, it hardly moved to 41. Now, now what happened is, and the profits were, company was loss making. And what turned around in FY19, company suddenly started making profits. So, and I would like you to guess what happened in FY24. The stock price in FY19 was 41. Can you make any guesses what happened in FY24? Where is the stock price now? Where are the profits now? Where is the revenue growth now? So I will just show you. Okay. This company is, by the way, Usha Martin. Many of you will know it. And what happened in FY19 was this: they had a steel plant. They sold that steel plant, which was which was hurting the other businesses as well. Their main business is wire ropes making, steel wires and all. So, but that steel plant was hurting the main business also. So what they did in FY19 was they sold that steel business to Tata Steel, I think. And just that one decision that led to a humongous profit growth, almost 10 times. The profits grew 10 times in, say, the next 5 years, just by taking that one decisions. And despite the revenue growth was muted. Okay, the revenue only grew by 30% in 5 years, but profit grew 10 times, because what they did was the loss-making company, which was dragging all the profits or all the ROCs and ROEs, they shelved it out, and what remained was the core business only, which was going well, which was doing well. So the same thing is happening here. The company which I wanted to discuss today is JM Financials, and in JM Financials, it's kind of a special situation, not a demerger as in say, but sort of a special situation only. So if you see this slide here, this is the company structure, and this would all be looking pretty much muddled, pretty much cluttered, by the way. So I will just simplify it, in the next slide. What is the main business of JM Financial? So JM Financial operates in these four particular businesses. Okay, investment banking is the first main bread and butter business. The reason I call it bread and butter is because they are the oldest investment bankers in the country. Okay, in fact, India's first equity warrants in the market were launched by JM Financial. The first 100 crore IPO in India was launched by JM Financial itself. And the first $1 billion IPO was also launched by JM Financial. So that's how old their investment banking business is. But what happened in 2012 was, in 2012, they started, putting some money in non-core businesses. Like they ventured into lending businesses in 2012. And from 2012 to 2016, 60% of their book was into these lending businesses. Okay. And post 2016 onwards, these lending businesses, this mortgage lending and alternate and distressed credit lending businesses, they drag down the company's profits and the company's return ratios. Okay, there is also fourth business called Platform AWS. Platform AWS is their recent venture, and Platform AWS is basically their AMC business. You might know JM Financial has some mutual fund schemes. They have a digital working app, and there is the wealth management segment in this. So all these are future young business, but is a growing business. Along with this investment banking, which is their bread and butter business, and this business is growing. Both these businesses, the first one and the last one, these are asset light businesses and high return businesses. But these the middle ones, the lending businesses, these are very asset heavy, balance sheet heavy businesses, and they are dragging the company's profits down. Okay, so I will just show you the background of this company a little bit. They do investment banking. Within investment banking, there are various concepts like QIPs, IPOs, warrants, bond issues. Any which way the promoters want to, let's say, raise money from the markets, everything comes under this merchant banking or investment banking. Then they also do institutional broking, which is bulk and block deals. They handle that. And within this investment banking, they also have a PMS and private equity funds. So which is very small, but the major revenue comes from this merchant banking and institutional broking only. PMS and private equity funds are a little low. But again, even this PMS business, this equity fund business, this is all asset light businesses. They don't need, they are free cash flow yield generating businesses. Okay, and then there is the promoter financing, the balance sheet financing, which is they provide loans to small institutions like the small NBFCs, and and they provide loans to promoters as well against share pledging. Okay, the second business is mortgage lending. Within mortgage lending, they have two divisions. One is wholesale mortgage and the other is retail mortgage. So the main stress they have is in wholesale mortgage businesses. The first thing they do in wholesale mortgage business is the project or construction finance. Let's say any builder, he wants to construct a new housing society or a new commercial project, and he needs a loan for that. Usually banks don't provide loans for construction projects, okay, for to buy a land, all right. But JM Financial used to do that, is doing that. And so what happens in this construction is these are very long dated cycles. Okay, the constructions, to start a construction, to complete a project can take time. So what, the anticipated return of that capital is it stretches to a very long time. Okay, and in loan against property as well, they give loans to big builders against the builded properties. Early stage projects, let's say during the construction phase. And they also they also provide loans, let's say for constructed properties as well. And then they have the advisory services and loan against securities. Out of these businesses, what they are doing now is these five businesses: project construction, loan against property, early stage projects, they are all shelving these businesses off, and they are only going to keep these loan against securities businesses, which is a liquid collateral literally. Okay, and within retail, they have an affordable housing finance business and a small ticket lab, which is one and the same actually. It comes under housing finance only. And then there's the educational institutions loans, and this also they are closing down the loans which they provide to educational institutions. So what will remain out of this is all gonna get shelved off. Okay, we will only remain with loan against securities, which is liquid collateral. And again, the housing finance, so housing finance sector is doing well. So they will keep these retail mortgage businesses. They will actually shelve off the whole wholesale business, and they will just keep the retail business. And within retail also, they will just keep the housing part. They won't keep the educational institutions part. Alternate and distress credits, as you may know, they see what happened in 2016. I think was government launched this alternate and distress credit thing, wherein banks and NBFCs, if they have long dated stage 3 NPAs, they could sell these NPAs at a lower price to ARC companies. There are other companies as well who are doing these businesses, like Edelweiss, Tata is there as well. But this is, very difficult business to do. Because what happens is a company, let's say like JM Financial, what they do is, let's say a bank has provided a loan to a manufacturing company, and they are not able to pay off that loan. So what the bank will do is, they will take over that plant, whatever plant they had, that manufacturing plant they have, and they will sell. Let's say they have 100 crores loan. They will sell this to an ARC at 30 crores or 40 crores. And what the ARC would then do is, they will restart that plant, okay, and get it in working condition. They will hire some industry experts. They will get it in working conditions, and then they will sell it. But all this requires a lot of time, and so the companies, the money they have invested, it gets stuck for a long time. And what it does is, it hurts the company's return ratios, ROC and ROCs. Especially after COVID, these resolutions are taking a lot more time to settle in court, let's say, or to revamp the sites which are closed. Okay, so this is a business there which they are closing down, alternate and distress credit as well. Okay, their last business is platform AWS. And within platform AWS, they have 3-4 different things. The first is securities, which is digital brokerage, discount brokerage. If you have your mobile phones with you, you can check in Play Store. They have an app called BlinkX, BLINX. Okay, BlinkX, which has good ratings on Play Store, around 4.7 average ratings. Then the second business is AMC, which is their mutual fund, and it is going very well. Right now it's not break even, but it is going that way. The assets are going well within the AMC business, and they are also distributors of financial products. This is actually their old business. This is distribution of financial products. Okay, the financial products like insurance, mutual funds. They have their client base and they sell their those financial products to those clients. Okay, and recently they have also ventured into retail and HNI wealth management, which is again a sunrise industry. Okay, which is going well. So this platform AWS business is not break even yet. This is loss making, but it is going well, and in the coming 1-2 years, they are going to make lots of investment in this platform AWS business, and it will give good profits in the coming 2 years. Okay. So what happened was, one thing I want to now tell you is whatever numbers which I am going to show you right now, those will be based on FY24 ending. Okay, those will not be based on currently Q2 end of FY25 or Q3 end of FY25. Most of the numbers which I will show you will be based on end of Q4 2024. Okay, and the reason for that is they made one good strategic announcement at the Q4 call of FY24, which is as I have mentioned here, they are going to pivoting the wholesale credit and the ARC business. These two businesses which are dragging down the return ratios. What they will do is they are creating an AIF, and the AIF will have the units just like any mutual fund scheme says, and anybody who wants to invest can invest in it. But what will happen when they create that AIF will be the balance sheet, the losses from this business won't be attracted in the JM financial books. It will be accounted to that AIF only. Okay, just like any mutual fund scheme, if they buy some stocks and those stocks go down, okay, the AMC doesn't make loss. The loss is for the investors. The same thing will happen in this AIF. What will now happen? JM Financial will charge an management fees in this AIF, and they will totally delever their balance sheet. The two businesses which were hurting their return ratios, they will be completely gone from their balance sheet. So their balance sheet will become asset light, and they will then focus on scaling this fees and commission business. The fees and commission is two businesses. One is investment banking, and the other is platform AWS. And their main focus now from now onwards will be to scaling these two high return generating businesses. Okay. Another thing which will happen is once they shelve off these two businesses, they will get a release of 2,000 crores of cash from these two businesses. Okay. Once they close down these two businesses, they will get a release of 2,000 crores. The company's market cap is around 11,000 crores right now, and they will get an incremental cash of around 2,000 crores. Okay. And by FY27, they are projecting cash equivalents to be around 6,000 crores after the debt is paid out. Okay. The current market cap is only 11,000 crores, and by FY27, they will have around 6,000 crores in cash equivalent after the debt is paid off. So roughly you're getting this company right now at less than 2 times its net cash and balance sheet. Okay, so 3 years down the line, 2 years down the line. And we'll now look at some of the revenue numbers of all these 4 businesses. Okay, as you can see here, this orange the graph here, the revenues from the investment banking businesses have doubled in the last 1 year. Whereas if you can see the mortgage lending and the alternate distress credit businesses, these numbers are not growing as much. In fact, they are going down. Okay, and the platform AWS business as well. In this as well, in the last 1 year, the revenues have doubled. Okay, it has gone from 151 crores to 300 crores, and in investment banking, they have gone from 270 crores to 605 crores. So more than doubled actually. So this shows that the company's focus is on these two asset-light businesses. And you can here see the loan book as well. The keep a major focus on the wholesale mortgage loan book. Okay, the wholesale mortgage loan book, which at the end of Q4 FY23, which was at 450 crores, it is now very negligible, only at 40 crores. They have totally run down this business. Okay, and this FI financing as well, they are running down this business as well of FI financing, which is the financial institution financing, the loans which they provide to other small NBFCs. Okay, they are closing down that business as well. Then there is the capital market. Capital market is basically the loan against securities. The reason it has gone down is the RBI had put some ban for some 6 months to 1 year. but they will grow this business, this capital market business, which is because it is very secure business. They are providing loan against liquid collateral. They can liquidate shares anytime or the mutual fund units anytime and get back their money. Okay. And there is the retail mortgage business as well, which is going very well. It has gone from 531 crores to 1100 crores was within the span of, let's say, 1 year only. This retail mortgage is basically their housing finance department, housing finance division. Within this housing finance division, their NPAs are actually very low, and that's why they are continuing with this business. Okay, as you can see, now I will just discuss some numbers regarding their platform in AWS, which is the new business. As you can see, the private wealth AUM, their private wealth AUM is also going really well. Around 20% growth is there in the last 5 quarters. Okay, from 56,000 crores, it has gone to 68,000 crores, and the same way in their PMS as well. In their PMS, it has almost their PMS AUM has almost gone by 40% in the last 4-5 quarters. So again, this is the focus on these asset-light businesses. Okay. And as you can see here, their their main income, which used to come mainly from interest, which is the loan they used to provide. That income was the the loan, which is the mortgage lending and all. That part was 52% a year ago. That has now come down to only 27%. And their fees and commission business, which is the asset-light businesses, investment banking and platform AWS, the revenues from that has gone from 47% to 72%. So what this is doing is this is improving the company's return ratios. As we can see here down, the ROE, the ROA and ROE are considerably forging upward. Okay, because of the what you can say, the product mix change. Okay, earlier it was 50-50. Now the 72% of the revenues are coming from let's say fees and commission businesses. And this is the mortgage lending graph. Here you can see the first I will tell you about the ROA and ROC. Look how low ROA and ROC businesses these are. Okay. In some quarters it is 1%, 2%, 3%. Okay. Whereas if you look at the investment banking part, that is a high ROE, ROC business. It is 20%, 25% ROE business. Whereas the mortgage lending, this is dragging down the return ratios of the main business as well. And their NPAs are also high in these businesses, in this lending business. Okay, because they are having to take a lot of provisions here. Here they took some provisions, and that's why PAT is down here in the Q4 of FY24. The provision, their NPAs are very high in this business. Okay. So they within this lending business, they have two parts. Okay, one is JM Financial Credit Solutions, and the other is JM Financial Home Loans. So within this credit solution, which is the mortgage lending, as you can see, as I told you in the previous slide, the NPAs are very high. Here you can see gross NPAs are of 7%, net NPAs of 3 to 5%. Okay, and the provisions are also high. So this is very high NPA business. So what they are doing is they are scaling down here. As you can see, the AUM is coming down in this business. From 9,500 crores, it is down to 7,400 crores. And within the next 2 years, this would totally this AUM would totally get clubbed with the AIF which they are creating. So on the JM Financial books, actually there would be very little AUM of this high NPA business. And this JM Financial, which is the home loan division, here their NPA, gross NPA is only 0.7%. And that's why they are looking to scale this business. If you look at the disbursements, the disbursements are continuously going up. And more importantly, the loan book is going up. The loan book is close to 40%, has seen close to 50% increase in the last 1 year itself. Okay, in this home loan division. And since the NPAs are low, they don't have any problem in scaling this business. Now, this is the most interesting part of the business, which I like, which is the future revenue generating business. This is the platform AW, which is the platform AWS business. Here you can see how much the revenues are going. Okay, and most importantly here the cost to income, which was close to 100% a few quarters ago. Now it is coming down, and they have projected this cost to income to go down in the next 2-3 years even more. It will come down below 50%. Okay. The same way their profit and the PBT and the profit after tax was also going in this business. Okay. The reason this here they have given is because they are making a lot of investment in this business, this platform AWS business. And if you don't count those investments, those profits would have been even higher, as they have shown in this graph. Okay. Yeah, they are literally giving the adjusted PAT to you here after subtracting the investments they are making in this business. Since this is a young business for them, they are making many, and the investments will continue for 2 years as well. They are making huge investments in this business for marketing, for marketing and to improve their technology in these businesses, and to hire more relationship managers for the wealth management business. Okay, same way here you can see if they hadn't made this investment, the ROE in this business would have been close to 20-30%. But since this is a young business and they are making investment, the ROE is looked down. But going forward, since this is an asset-light business, the ROA and ROE would be very good in these businesses. Okay, here again, this is another slide of platform AWS only. Here you can see the ADTO, which is the average daily turnover in their BlinkX app, which I told you is available on Play Store. It has gone roughly from, let's say, 30,000 crores to 55,000 crores. Yeah, okay. Their average daily turnover, that is. In Q4 FY23, it was only 32,000 crores, and now recently it is 55,000 crores. And this might have even gone in the last 2 quarters because these numbers are for Q4 FY24. Okay. So the penetration is growing even in the digital booking business. And this is their MTF loan book, which is the margin trade facilities. They also provide loan against the MTF loans. That business is also going from 600 crores that is gone to 1,400 crores. Same ways, this is with the retail wealth and elite wealth. All these segments are showing good growth, 20-30% growth. Okay, and they are increasing their penetration layer. They are increasing the number of relationship managers within this business. This is they have shown here the BlinkX apps, which is available on Play Store. Okay, their penetration is increasing, as I said, right now present in 215 cities. This is the slide on the alternate and distress credit, which is the most stressful segment of this business. Okay. So in this, as you can see here, the assets acquisition, they have stopped acquiring new assets now. Even if they are acquiring, they are very minimal. Earlier, they used to acquire around 2,000 crores to 3,000 crores of assets every quarter. Now they have totally run down this business. They are not acquiring any new assets until that AIF is created, and then that AIF will and then that AIF will acquire any new assets if they like. This is on the recoveries part from the provisions which they have made. Okay, so this is the incremental cash which can come in the business, which is already in this assets in this alternate and distress credit. So the net income is also going down since they are not acquiring new assets, and the PAT is actually we can't say because very low, because again this is the turnaround takes time in any alternate or distress credit. The turnaround actually takes very much long time. So your assets, your cash capital is stuck for a very long time in this business. Again, now they have some treasury assets within the balance sheet, which is the cash equivalents. If you open the balance sheet, you can see they have they have treasury balance of around 6,000 crores already. Okay, which is out of this 6,600 crores, only 400 crores, 392 crores is in real estate. The other rest, all those investments are made in liquid assets. which can be liquidated at any given time. Okay, so around 6,200 crores is their liquid assets, and these are generating income for them as well. As you can see here, the PAT from these treasury assets is growing. From let's say in this last quarter it was 137 crores. Before that it was 98 crores. Okay, these are the company's investments. Then these are on their balance sheet. This they can use to either scale down their debt or invest in their future businesses, which is the platform AWS business. Okay, and within this JM Financial Credit Solution and their JM Financial Home Loans, they actually don't have the full stake. So what they are doing is using 1,200 crores from these treasury assets to increase their stake. It is going from 47% to 90%. The reason is it is going to only 90% and not 100% is some of the investors in this JM Financial Credit Solutions, they are not ready to sell back to them. So they made some interesting points in the Q4 FY24 con call. And as I told you, investment banking is their bread and butter business, and they are the number one franchise in IPO and QIPs for FY24. And they are sort of market leaders in the investment banking business. Okay, they are seeing strong momentum in their platform AWS and retail mortgage business, which is the housing finance business as well. Mutual fund AUM, which started with around 2,500 crores, within 1 year it grew to 8,000 crores AUM by May 2024. The brokerage business had an ADTO, which is average daily turnover. It went up by 70% year on year, and the MTF book grew by 122%. This is based on FY24, Q4 FY24, right? And now these are some updates on different businesses. The private equity business, which was loss making in FY23, it has given a small profit in FY24, and in FY25-26 it is expected to contribute even more. Mutual fund business was loss making. As I said, it is not break even yet. Okay, in 2024, due to low AUM, they had at the end of FY24 they had an AUM of only 5,000 crores, and roughly now it has gone to 15,000, 16,000 crores AUM by this December, which is the December FY24. Right now their AUM is around 16,000 crores from what I know, and they are expecting this mutual fund business to contribute to good profits by FY27, but this business should break even now. Now that the 15,000 crore AUM is achieved, what they had told was once the AUM of 15,000 crores is achieved, the mutual fund business would be break even, and further post that it would start giving profits. PMS business, within the PMS business, they had 20 crores of loss in FY23, which was narrowed down to 2 crores in FY24. So this business itself might become profitable next year itself. Okay, this might break even in next year, and in FY26 it might give good profits. JM Products, which is the financial products distribution business. Again, this is a very old business for this company, and it is contributing to good profits already. And they might go here or not. That much is not said, but this is a good profit generating business for them. Home loan business AUM is right now 2,100 crores at the end of FY24, and that they are targeting an AUM of 6,000 crores in this business by FY27, which is an implied growth of 35%. Okay, and since the NPAs are very low in this business, okay, so they can go at a good rate here without stressing their balance sheet. Okay, we look at some of the future guidance which is given by this company. The incremental 2,000 crore cash which will come after the mortgage wholesale mortgage business and the ARC business which will be shelved off to the AIF. They will generate 2,000 crores for after that. Okay, so that 2,000 crores will go into growing the AMC, the wealth management, and the digital working business. And they have also said that they will post after one or 2 years they will start giving out good dividends right now. Okay, because they will have this incremental cash. They already have good treasury assets, and this 2,000 crores will also come in. Okay, so they will start giving good amount of dividends going forward. Loan against shares, the book which was banned by RBI, that ban has been lifted by RBI in Q2 FY25. So loan against shares, which is the liquid loan part, they are going to go this business as well. So around 1,500 crores will go into going this loan against share business. In future, they have also given a guidance that they will demerge the housing finance division as well into a totally separate entity. Okay, which will create further value for shareholders, because what is happening right now is JM Financial is very cheaply valued. If you look at the book value, it is being right now valued as an NBFC. Okay, it is valued at only 1.51 times book value. Whereas if you look at any good let's say housing finance NBFC, they are all trading at three times book value, 4 times book value. If you want to look for like peer, it is India Shelter Housing Finance. They also have around 6,000, 7,000 crores AUM, and their NPs are also similar, less than 1%. They are roughly trading at 3.5 times book value, whereas the JM Financial whole entity is trading at only right now 1.5 times book value. And in future, if they demerge this business, there can be huge value creation for both the parent entity, which is the investment banking and the wealth management businesses, as well as this housing finance division, because the AUM itself will go in this housing finance division from 2,000 crores to 3,000, 6,000 crores. So 3x growth will come from AUM side. The rest of the value creation can come after the demerger, and this can re-rate from 1 times book value to 3 times, 2 times, 3 times book value. Okay, and what will happen is once this demerger is done, the rest of the business will right now it is being valued as an NBFC, but going forward this will be an investment banking and wealth management business. So it will be more valued as the investment banking and wealth management business on PE ratio rather than on PB ratio. Okay. 50 crores they will spend on digital booking and AMC to go this digital booking, AMC and wealth management businesses, and 50 crore every quarter actually, which is the annually they will spend 200 crores on going this platform AWS business, and they will continue that for the next 2 years, because these businesses are in very nascent stage right now, and they will require some investments to go post 2 years. Profit growth would be even higher, because these investments would slow down. Okay, the 200 crores investment there which they are putting in this business right now, post after 7-8 quarters, these investments would slow down, and so profit growth would be higher. And in JM Financial Credit Solutions, right now they have 47% stake, which they are taking to 96%, and for that they will require 1,250 crores. Okay. So the main thesis here which I want to highlight is this company which is right now being viewed as an NBFC. In the next 1-2 years, this will be viewed as an investment banking and wealth management company. They will have a housing finance division, but that will also get demerged in 2-3 years time. Okay, so, so right now what the market is seeing this as only as an NBFC. But what they are doing is they are shelving off most of the NBFC business, except the housing finance business. They are shelving off that the other businesses which are stressing their balance sheet into an AIF, and they will only themselves manage it at AIF, but the stress won't be in their balance sheet. The stress would be in the AIF, and they will in fact get the management fees for that AIF. So here I have done some peer comparison. The main thing which I want to highlight here, first thing is ROE and ROCE. If you look at the other investment bankers like Motilal Oswal, IIFL, ICICI Securities, all of them have a high ROE and a high ROCE. Okay, in the 20s and the 30s. But JM Financial, it's very stressed because of the mortgage business. That mortgage business is impacting the whole return ratios of this company. And in FY24, their fees and commission part of the business was only 22%. Whereas if you can see for the peers, the reason why their ROE and ROC is high, because because they are generating more revenues from the fees and commission, which is an asset-light business. 50% for Motilal Oswal, for IFL it is 80%, for ICICI Securities it is 65%. Okay, but once they have shelved off this mortgage business to the AIF, for JM as well, this 22% would go to 80-90% almost, only because only the housing financial division will remain. Okay, all of the rest of the revenues will come from fees and commission only. So once this goes to 70-80%, the ROE and ROC for this company would jump humongously. Like we can see in the mid-20s or even mid-30s as well. The ROE and ROC can go that much high. If the PE ratio right now, it looks high because the earnings are depressed. Earnings are depressed because of the mortgage lending business. Once this mortgage lending business is shelved off, this PE ratio for JM Financial will come drastically down. In fact, actually, if you only look at the investment banking part, they are making around 750 crores profit in the investment banking business itself. Okay, and if you only consider that part, so 750 crores, so the PE ratio is actually only 8 or 9 right now. If you don't count the mortgage business and other businesses, if you value it only on the investment banking part, the PE ratio comes down to 8 or 9, 8 to 9 times only. And plus their platform AWS business, since they are making right now huge investments in their business, what is happening is they are not able to generate good profits in their business. But 2 years down the line, once those investments slow down and those businesses get matured, profits would flow from that business as well. So the PE ratio is actually looking high, but it is not high. It is very much in the single digits only. Okay, in 3 to 4 years, my projection is this company can make 1500 crores to 2000 crores of PAT with this platform AUM business going, and they already have the leadership in investment banking. Okay, which even if you consider an implied PE of 20 times at the time of exit, we can get a market cap of close to 35,000, 40,000 crores. The current market cap after this market drawdown is only 11,000 crores. When I made this PPT, it was 12,000 crores, but right now it has come down even more. It is only at 11,000 crores. So we have good margin of safety. And as I showed you in the example of Usha Martin, once they shelved off their steel making business, their profit soared 10 times in 5 years. Something similar can happen. I'm not saying that the same thing happened, but something similar can happen. Profit growth here can be huge. Okay, because the businesses which are stressing their balance sheet, they will be shelved out very soon, and they will be left only with the asset light businesses. And once they demerge their home loan division, home finance division, that will create to further value creation, and we might even see 4 to 5 times of growth in profit. Okay, recently, as as you have seen in this slide, all this even their peers are rated only at 15, 16 times P. Why is this happening? Okay, recently you might know that an IPO came out called DAM Capital. Now, DAM Capital is purely an investment banker. They don't have any wealth management business. They don't have any AMC or broking business. They are purely investment bankers, and they are very small scale. Okay, very small compared to any of the rest. Okay, but at listing price, their PE was 40 times. Okay, and if you see all the other peers, although they have different businesses in AMC and wealth management, but they are all these peers, Motilal Oswal, IFL, ICICI Securities, JM, they are all valued very cheaply compared to DAM Capital. For me, and this valuation gap can come down. Either DAM Capital might derate or these companies might get re-rated. One of the things has to happen because such valuation differential cannot last. Even after this market drawdown, DAM Capital is still trading at, I think, 35 times earnings. I will just show you in here. Screen. Just a second. As you can see here, DAM Capital, it is a purely investment bank, and and they are trading as 35 times multiples. So there is a chance that this whole sector might get regulated. I don't know, but this is a possibility. And if that happens, then we are looking at even higher stock price growth. Okay. The base for DAM Capital is small, and as I said, this is only a 2,500 crore company, so it might go at a higher rate compared to others, but still, this valuation differential might not last for long. The other point is investment banking and wealth management businesses, especially the investment banking business in India, is at a very early stage. Okay, you can say like banking was in the 80s and 90s. Investment banking is at that juncture right now, where as the economy is going, we are seeing more and more companies getting listed. Promoters are more willing to raise capitals from capital markets rather than go to the bank and raise debt. Okay. Since the participation is increasing, investment bankers are expected to do well. In fact, a few days ago, BSE management gave an interview that they are seeing a strong pipeline of IPOs coming in FY25 and FY26. So all these signs are good for investment banking because they make businesses from IPOs and QIPs and warrants issues and bonds and all that. So if you look at the management commentary from any of these 4-5 peer companies, they are all very bullish on investment banking as a sector. In fact, in the next 5 years, they are expecting high double-digit growth in the investment banking business. And wealth management, we all know wealth management. If you look at companies like Nuvama, Anand Rathi, even Motilal Oswal, they are all growing by 25-30% as well. So growth here in both these businesses, investment banking as well as wealth management, is going to be upwards of 20-25% even on an industry level as well. Okay. Individual companies may go at faster rate or lower rate, but the industry itself is going at 15, 20, 25% as well itself. So this is the sunrise sector. I will just show you the charts right now. This is a monthly chart of JM Financial. I'm invested from around 97. What happened was here, as you can see, the stock price came down because the RBI had put a ban on the loan against shares. Okay, so what happened was the stock price fell from 115 to around 70 approx. But what they did was in Q4, after that they presented this strategic update that they are shelving of this wholesale mortgage businesses, and so stock price rose swiftly again, and it gave a breakout here from 115, and now since the market sentiment is down, it has come down again. Okay, and it is retesting that breakout levels. Okay, so I think the risk reward technically is very good here, since it is a monthly breakout retest, and monthly breakouts usually don't fail that much, and we are seeing good earnings triggers as well. Once in the coming 2 to 3 quarters, the mortgage business should scale down very much, and that AIF they have given Q1 of FY26 as the estimated timeline when that AIF will be created. So in the next 2 quarters can be very good for GM once that AIF is created and their balance sheet would be totally delivered. And their balance sheet would be only asset light. So I think it can respect these levels. It is very cheaply valued compared to peers. There's a chance that the sector as a whole might regret. So everything is aligning up for this company. The only risk which I see is in an extended bear market. What happens during bear markets is that if bear markets extend, what happens is that the IPOs speed slows down, QIP slows down. Promoters don't get those same valuations for those companies, so they don't raise capital. So they don't do capital raising activities. Okay, equity AUMs, since they have a mutual fund business and the wealth management business as well, those AUMs don't go as well because of an extended bear market. The M2M profits don't go. Okay, this is the only major risk. The other risk can be from the SEBI side if they put some rules and regulations for wealth management companies or investment banking. But that I don't see as a risk. The only major risk is if we have a bear market for let's say 3-4 years, then the earnings might slow down. So this was it. Just one thing I want to show on screen. Just a second. I want to show the promoter holdings. They have done some buybacks recently. Okay. Here you can see promoter holding in 2021 was 55%, and now it has gone up by 1.5 times, 1.5%. Actually, this was gone before they made the announcement. So they were secretly doing buying before making this announcement. Okay. And what they have given guidance is that once they have by FY27, they will have 6,000 crores of cash on their balance sheet. So what they are saying in the recent con call, what they have said is they will also be interested in buying back more of their shares. Shares once that AIF is created and their platform AWS business gets matured, they will on the incremental cash which they have, they will be interested in doing more buybacks and giving out more dividends. Okay, so this was it from my side. Any questions? I'm welcome for it. Hello.
Yeah.
Hello.
So, yeah, we are able to hear you.
Yeah, I'm ready for any questions if there are there.
Yeah. So it's a transformative business basically from one industry to another, right?
Yeah, it is
Oh.
the profile of the company is changing.
Yeah. And as you said, possibly the risk is if the industry goes in the downtrend and the IPOs stopped coming suddenly, those are the kind of the risk we can see in this company at this point.
Yeah, those are near-term risks, but those risks are not in the long-term in nature. Those risks might be there for 1 or 2 years, but we will get back on track after less. If you look at the stock at 3 or 4 years horizon, then it will definitely do well. In the near time, it might not do well because if we have if the bear market gets extended, then it might be a little bit of a challenge. But if from a 3 to 4 years perspective, it will definitely do well.
Okay. So yeah, any other participants have the question?
Ankit, can you go to that peer comparison?
Yeah, just a second. Yeah, it is.
Ankit, doesn't it compares with Edelweiss financials? Yeah.
Edelweiss Financial is also a little bit same. Na? They are also doing lending part. What I wanted to show is since the company profile is changing, we want to compare it with wealth management and investment banking companies. We don't want to compare it as an NBFC to NBFC peer. Edelweiss is also doing this asset reconstruction and other lending businesses. So what is happening in JM is they are totally changing their company profile. They are going from the lending business to what was their bread and butter business, which is investment banking, and they are growing their wealth management and the brokerage business and the AMC business. So Edelweiss is not. I don't think it is a right comparison. Because what Edelweiss did was they demerged the Nuvama, as you might know, Nuvama Wealth. It was demerged from Edelweiss only. So they already demerged that asset-light business. What is remaining in the Edelweiss is more of an NBFC now.
No, Edelweiss is it into NBFC capital management. Plus they have mutual fund business as well. Plus they have insurance business as well. Of course, insurance business is the loss making one. But if they cut that loss making business part or give away with that, their P will again re-rate because the same case of Usha Martin there. But again, Edelweiss is
But have they
also
given any guidance that they want to, divest their business or do something? In JM Financial, we have that certainty that they have given the timeline that by Q1 FY26, those lending businesses won't be part of the balance sheet anymore.
Okay, wealth management. So in wealth management, Nuvama is also a player, right?
Yeah, Nuvama, yes, is that. Nuvama is a demerged entity from Edelweiss only.
Right. And I understand their portfolio is, kind of very emerging. But, P is, of course, very higher. It's valuations
The
are
growth
there.
is also high, na? Growth 25 to 30% se grow kar rahe hai wo log.
Grow current, plus it gives, say, for example, I am as an investor with, more than, 50 crore portfolio. They put it into listed, non-listed. So they have, array of, investment opportunities there.
Yeah.
Any kind you see there in JM Financials as well? Say, for example, as an individual investor approaches Nuvama, they find the spots for them, exclusively for them.
In wealth management, JM actually have two different categories. One is the retail wealth, which is less than 100 crores, and wealth is elite wealth, which is more than 100 crores. So if you have more than 100 crores, they have a separate team, separate relationship managers for those kind of clients. And for retail customers, which is less than 100 crores, they have a separate team. Other than that, they have not given much disclosure, nor have I written any email to them. But we can get these details if we email them. They might be willing to share these details.
Right. And actually, there from newcomers which I was tracking, there lot of revenue or good portion of profit comes from there as well, as India's emerging market, and the segments and the pockets they identify.
I
They
think
have got it,
70 to 80% from wealth management only, and the rest is little bit of capital markets, research, and all that.
Right.
They have an investment banking too. Nuvama has an investment banking too, but
Right.
majority revenue comes from wealth management.
Right.
So this is we have this optionality with GM that in future, once they demerge that housing finance business, they can further do a demerger of the investment banking and the wealth management business as well. This possibility is there. They haven't guided anything as such. Right now, they have only guided for the demerger of the housing finance division once it achieves 6,000 to 7,000 crores of AUM. Okay, but that optionality is there for the future.
Right. Thank you.
Okay, thanks, Ankit. We'll move to the next presenter, Rajat. If any more questions, we'll take in the chat.
Am I audible?
Nice presentation. Yeah, you're audible.
Pune?
Nice
Okay.
presentation. Yeah.
Let me share. Let me know if my screen is visible, Pune.
Yeah, it's visible. You can
It's
put it in
visible?
presentation mode. Yeah.
Okay. Yeah.
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 You can go ahead.
I'm starting. So hi everyone. Thank you for giving your time on Saturday, and I will make the best effort that it goes fruitful for you. So all the fellow participants have given the right disclaimers and disclosures. So let's continue with that. But when I was studying this business, what was I thinking? And so that's why I put in a disclaimer for myself. So businesses are run on ground, and there are like multiple cycles that happen around, and there are humans who run the business. So nothing happens in a jiffy. So as Mr. Sant Kabir Das says that everything happens on its time, and when season comes, you get fruits and flowers. And the seasons are dependent on nature, and if you see, nature does not hurry, yet everything is accomplished. So when we study a business or when we look at a business, some of these things make a cornerstone of how we think. So the whole purpose of my session is to let you know how I think, how I analyze some business and my thought process. So if you see, to be in sync with the fast changing world, thematic approach works. And how it works is you have to identify a particular trend and then look at who can be the market leader of that particular trend or that particular theme. In this, I found that the digital public infrastructure, DPI, which is called, can be a 1 trillion digital economy. India can be a 1 trillion digital economy by 2030. So the government says that will reach like 7-8 trillion, but of which 1 trillion can be DPI. And in this, I believe that Protean Egov can be one of the leaders, and one can play this theme via this particular company. Now, how I will analyze a business is there is an economic cycle. So what government is doing, what policies they are coming up with. Then there is a business cycle. So how e-protein is a part of that story. And then there is a market cycle like demand and supply and technicals and all those things. But it's not about these three. We also require a catalyst for growth. So if India's digital inclusion is going to get accelerated, what catalyst can Protean have, which will take it to the next level?
So while I was studying this business, I'm very sure many like you who have seen this business would have some questions like I also had these similar questions like if this is such a good business, why recently their margins have been suppressed or dragged? What can happen for their EBITDA margins to improve? Then their return ratios for such a high growth business are appearing lower. Will the business revenue be too much dependent on government policy, regulation, compliance? And then geopolitical, currency risk, regulatory environments. And the last part is, why should I consider this stock, which is already trading at a rich valuation? So, along with you, I also had all these questions, but let's start and let's explore if we can get some of the answers for this question. So, at start, we don't have all answers, but we will try to find out. So, digital public infrastructure, all of you know, especially post-COVID, that digital has become a part of our life, and government policies created around it created an exponential change in the way India operates with geo and internet and everything. And then we have 5G and IoT to be coming. So there is a physical infrastructure and then there is a digital infrastructure. So we are already seeing railways, roads, cell towers, internet cables. So some of the fellow participants have already presented stocks in those sectors. So all of us are very well aware that how physical infrastructure is growing. And then the country cannot grow without a combination of both. So we need sweet spot of physical as well as digital. So in digital infrastructure, we have payments, data fulfillment, identity management, and open tech standards and systems. So let's see what exactly happened. The data is a year old, but it still gives fair pictures. Like there are a lot of national highways are getting built. Then there are airports that are getting built, and more airports are coming. Railway infrastructure is getting modernized. And then on digital side, we have millions of smartphones, 5G devices, optical fiber, and then connectivity of through BharatNet and data centers. You would have heard that how data center capacities are getting built in India. So please understand that what we are discussing is like economic cycle. So economic cycle, business cycle, or market cycle. There are only two phases. One is expansion, and which is called growth, and another is contraction, which is kind of recession. So looking at this slide, at least we can take a trend view that Indian economy or India's economic cycle is on expansion mode, and the numbers are there to see. Now, what did government actually did? So DPI is digital public infrastructure. So you must understand that it is for public, towards public, and in the best interest of public. So there is a market, so public and private innovation can happen, and competitive players can come and create solutions. Then there is a governance. So government will have legal and institutional framework and public programs to drive adoption. And then they have open tech standards building blocks. So this is not a proprietary model. This is a model which should be reused by others. And if it is not, it's not a DPI. So what they are trying to do is they are trying to build an open tech standard and building blocks which can be used across any participant which has interest in building something. And then those can collaborate and work together to actually resolve people's problem. um, how this structure looks like. So I will simplify it. You can consider only three layers. The physical layer is where your data centers are, like your network compute storage. So you might be hearing that a lot of data centers, and recently government have also announced that the AI computes and all are coming up. So that is the physical layer. So on that physical layer, you can build a digital layer. So you have a digital public platform and digital public goods platform. And then we have a solution layer where the private players can come and use the below two layers that have been built by the government and Protean, and then create their solutions on top of it. So maybe looking at this slide, you might be finding it little difficult to understand. So let's go into a building block. So if you see, as we discussed, payment, data, identity, signatures, discovery and fulfillment. So across all these categories, if you see the below building blocks, these are the services that have already been built or that can be built in the future. So you can understand the scale. So in identity, you have KYC, you have health facility registry, and then tax ID. And in your AIML models, you have open finance, health data sharing, e-locker. Then you have signatures like e-sign, PKI digital signature, consent, and same way, e-commerce and payments and everything. So some of these portions we use in our day-to-day life, some of these will be part of our day-to-day life in a decade to come. So how does this whole ecosystem looks like? So post the physical infrastructure, if you see in this diagram, you have DPI layer, and on this particular screen, you might be seeing lot of applications that you actually use, or lot of names that may be giving you some clue. So if you see here in DPI, you have ONDC, DEPA, UPI, Aadhaar, IDEA, NDR. So the below two layers are part of DPI layer, and the above two layers forms the solution layer. So if you see, a lot of solutions have been actually built on the below two layers. So FASTag, DigiLocker, Swayam, CoWIN, which we used in COVID, BMAP, UPI, IMPS, and many more. But the most important part is you can look at the sectors that it touches: education, logistics, agriculture, and healthcare, financial services. Now, you can see here that who are all these private players who are actually participating to use the DPI layer created by Indian government. So if you see here in education, Byju's, Upgrad, Vedantu, then in healthcare, Practo, Tata MD, Piramal, ONDC, which is a new one, and then we have Amazon, Delivery, Dunzo, and in data empowerment, all the private banks. So if you see, the ecosystem is getting built, getting gelled, getting collaborated, and then solutions are built on top of it. Now, there must be a very natural questions that how does the DPI differs from a public only player or a private only player? So if it is a government only player, what happens? There is a government, then there are department and ministries, and then there will be only government apps. So you are not really sure about the efficiency. When it is about private players, it will always be a proprietary model. So there will be private tech companies, then they have their platforms, and then they have their interfaces, and then on top of it, they have the market apps. Now, what does DPI do? They try to actually take the best of both. So there will be a government and regulator who will form the rules of the game. Then there will be interoperable DPI. So there will be open API protocols and shared platforms. And then on top of it, they will have private-public partnership where people can participate and create diverse applications, and market innovation can happen through that. So again, I will come back to my first point. The whole concept of DPI is to public, and for the larger good of public. Hence, they have taken a middle approach, and that is the only way they can make the solutions affordable. Now, as I said number of times, that open text standards and collaboration and all. So how you will see DPIs? So they get connected and combined via interoperability specification protocol. So if you see the below diagram, there are multiple pieces of puzzles, and then they will be put together as solutions built by an ecosystem for a larger social good. So they are inherently decentralized, managed by many, evolved in different ways, and need to work together. All the slides that we discussed are very important to understand how the economic cycle, how the government policy formation, and how government is actually creating this ecosystem for a larger good, so that you will understand how Protean can be a part of it. Now, how does it will affect? So there is a financial inclusion. Our street vendors, small shop owners these days are using UPI. People have Jan Dhan accounts and all of that. That is financial inclusion. Social inclusion. So, you want all people to have Aadhaar, need to be identified. then all the services that government wants to do for people, they should be reachable. So the lower strata people should also be part of India's story. And then what does digitization do? Time saving, cost saving, and ecological impact. So obviously, I mean, papers are no more like very important, and everything is on digital world. So these are some of the numbers you can later on see in the slide. But by 2030, this is the kind of impact that can come when the Indian economy, the digital economy, can reach actually 1 trillion mark. So what we have discussed so far is economic cycle, which is expanding, which is in growth, and how the levers are set, what government is doing, how the technology stack has been built, and how data centers, digital public infrastructure, and on top of that, the solution layer, which will be used by the private companies, will play a big role. Before coming to NPS, before coming to Protean Egov, all of you must have had one experience during 2016 when Jio was launching. Prior to Jio days, whenever you go and buy a SIM card, there used to be a day or two waiting time for SIM card to get activated. What Jio did, they have taken Aadhaar authentication. So you go into a Jio outlet, they quickly do the Aadhaar authentication, and by the time I could reach home, my SIM card was activated. So this is the point: time saving, cost saving, ecological impact, financial inclusion, social inclusion. So at that time, it was difficult to understand what is getting built and how it will impact. But 8 years, we very well know how Jio has changed the world. But then they used the Aadhaar stack to make their time to market faster. I hope, I mean, you got the idea of what I'm trying to say. Now we will study business cycle. So again, if you see this picture, there are a lot of areas that Protean touches. So we will quickly go one by one. So it's a pioneer, it's a 30-year-old company. First, they have been formed to create the infrastructure for capital markets, which was earlier called as NSDL e-governance. Then they have been given a task of India's tax reformation, which they successfully did. And you can see it on this slide: e-governance platform, tax system, pension system, foundational identity. And now slowly they are pivoting towards open digital ecosystem and enterprise digitization. So it's a IT enabled solutions company that creates digital public infrastructure. Um, One more thing that I would like to have your attention on. Okay, I'll take that slide later. So what is Protean Sage? They are pioneers. They are cornerstone of India's digital journey. They do pension, CRA, PAN, payments, data, everything they manage, moving towards ONDC and open digital ecosystem. But whenever I look at such technical or platform business, I usually in the management, my major interest is into product and innovation officer and chief technology officer and their digital officer. So the lower three guys. So I did a little bit of study on like internet, like who are these guys, where they come from, and how. And if you see here on the data, they are very highly experienced guys, and they have been associated with this company. And the most important part is they have built a solution which was deployed pan-India, and they have been able to manage billions of transactions successfully so far, which I think we should give a credit where it's due. I think they did a good job so far. So what good job they did? Well, on your left side, there is a tax service like PAN and TIN, Social Security, NPS, and Atal Pension Yojana, and then digital identity, Aadhaar authentication, eKYC, e-sign. So these are the services in which Protean is already a market leader. So it has very high market share in all these services. But my major interest is how they are pivoting from the left three, where they have already a leadership and there is a humongous possibility of growth, towards the right three, where they are building new solutions which can scale. So we will look at each one one by one. So first and foremost, Protean has 64% share in PAN issuance. So I will not go into detail, but they have managed billions of transactions for PAN, billions for NPS and API. So for NPS, they have like some 94 or 95% market share, and for Atal Pension Yojana, 100% market share. Now, if you look at this slide and look at, like, market cycle, business cycle, whether it's in expansion or whether it's in contraction. So if you see most of these charts showing some story that these are in last 4 years are kind of growing. So Aadhaar authentication, eKYC, e-sign, online PAN verification. I am reasonably sure that all of you have gone through all these services. So I don't really need to spend time to elaborate like what happens when you do this or when you use this. So then on top in red color, you have PAN. So number of PANs are getting issued, annual PAN issuance and tax services revenue. Now, interestingly, there is something like PAN 2.0 that is going to come. Government has announced it, and we are still not sure, but there is a possibility that all our PAN cards may get replaced, or people can apply for a new PAN cards and all of that, which will anyway add more revenue to this company. And then you have CRA services and revenue pension services. So if you see, the whole point is not into numbers or data. The whole point is understanding the trend. There is a clear expansion across all the leadership portfolio. Now, that is fine, but how the revenue is generated and what can be the growth if they already have a bigger market share? Is there a way they can grow? So if you see here, the PAN issuance, PAN 2.0, it is going to keep growing. PAN is required everywhere. PAN, Aadhaar have been connected. So all these things, your property transaction, government schemes, jewelry purchase, credit information, investment in share and mutual fund, it is going to keep growing. If India is going to grow, if India's GDP is going to grow, these things are going to grow. And in the later section, if you see, this is how their revenue comes. So you can take a look later. This is important because narrative is fine, but how they are going to get money from. So this is how the charges are charges per transaction, important, per transaction. So they charge per transaction, and this is how they charge for PAN. Now, in NPS and so let's not call it NPS or APY. Let's call it social security. So you must have seen that this government is very focused on bringing social security to the most people or lower strata people as well. So if you see, even if you compare, so Indian market usually goes on a trajectory of how US goes. So if you see, in US, you have 70% penetration for social security. We are just 6%. Now, if you look at these numbers which are present there on slide, you can see the opportunity size that this company can have in its lifetime. So in last year union budget, the government announced 2 more schemes, NPS Vatsalya for small kids, and they have increased the threshold limit for NPS also. All this will increase the transactions. The transactions will move into revenue. So again, how the revenue comes, all the pension account opening, maintenance and transaction charges, they are in the slide below, like 40 rupees, 15 rupees and all of this. So it is on per transaction basis. In the union budget, the NPS announced for minors can cover actually 40 crore minors. Employer contribution has been increased by 40%, so from 10 to 14%. And then something related to farming, which we will take a look in the forward slides. So what we discussed so far has been their legacy business, and they are market leaders, doing well, have a strong revenue, and everything is fine. But now let's go to where they are pivoting to. So In my view, this open digital ecosystem is the one where there is a larger interest. So they are building 4 solutions, and I think they will keep building. But the most important point is the last line, to solve for population scale problems. So ONDC, AgriStack, ONNest, and Health ABDM. So let's quickly go one by one in these solutions and see what actually they are trying to build. So ONDC is open network for decentralized commerce. So it is very similar to e-commerce, but there is a difference in the stack, which I'll show you in the next slide. But let's understand what it is. In my view, it is the most important and should be a high growth segment for Protean. It is a technology service provider which powers the entire network of ONDC. And by the way, uh, Protean has around 3.5% stake in ONDC. So they are one of the founding members of ONDC. Right now, Protean is directly compensated by ONDC as a market institution, and in future a market participant compensated model like UPI may come. Government invests and creates the digital infra, and network participant pay for it transactionally, like Geo would have paid for other authentication. Management has indicated that it can potentially earn 8-10 basis point of gross merchandise value on transactions through ONDC. Their forward model can be SaaS model that can go live when Protean would be providing buyer and seller technology. And I think if ONDC gets adopted and penetrated, there is a huge revenue opportunity. On right side, if you see, they have recorded big orders during T20 final. They charge commission, which is far lesser to Amazon and Flipkart. So that is also their key point because it is for public, to public, and for the good of public. And if you see in India, there are more than 12 million sellers who earn livelihood by products and services, selling products and services, but only 15,000 of them have enabled e-commerce. So for many, it is out of reach, and Protean may try to solve this problem. So the size is huge. Now, what is the difference between a normal e-commerce and this ONDC? So if you see here, interesting chart, interesting figure. So there is a seller, there is a buyer, there is a proprietary protocol, and then there is a platform in between, which is a closed loop. What government is trying to do via DPI and on top of it having ONDC is you have a seller side app, you have a buyer side app, and Protean is in the gateway right now. So here the collaborators can come together, use the underlying ONDC model, and have collaborate together and have their own ecosystem, which may not need to pay as high proprietary charges as you have in a closed loop e-commerce model. So interesting in my view, and we will see how it all scales up and how things shape up. But I'm sure this PPT will give you the brief on how it is different. Well, these are some of the numbers. So 13 categories are live, 980 lakh plus total orders, monthly orders, number of transactions growing, but this is a QOQ data. The last data for legacy was YOY. This is a QOQ, and a very interesting trend that we are able to see in terms of number of transactions, apps, and types of transactions. So again, looks like this particular segment is in expansion. And we will figure out in times to come how it all scales up. The next is AgriStack. Now, in AgriStack, there are 3 important things: farmer registry, geo-referenced village maps, and crop registry. So I will simplify it for you. What actually government is trying to do is giving every farmer an identity, then take them on digital map, then do the geo-referenced village map. So these days you have been hearing a lot of companies like Cnsys and Genesis. They are doing a lot of work in this geo mapping. So in AgriStack, what government is trying to do is to actually have maps of farmers' land, create digitalized land records, and then also have data of what crop a particular farmer has actually sown. And then based on the analytics of that data, you can actually scale a lot of services. So right now, if you see, there are a lot of problems. The bigger, richer farmers have all the wherewithal to do like technology, big equipments and everything. It is the smaller, a very small farmer cannot buy a tractor just to farm his land occasionally. So he has a lot of issues. They don't get finances. They are not non-tax paying, so very difficult to get loans and everything. So while in my honest review, this seems to be a bit of a weaker product amongst the all products, but if there comes a really sharp brain and uses this AgriStack well to scale the services, this segment can be very, very big. So if you see here, like we did geo services, there is a very high possibility in future that a farmer applies for a loan, a Jan Samarth, Aadhaar-based authentication, standard digital form, goes to AgriStack. AgriStack has all the records of digital land ownership, verification, crop pattern verification, and then later on, there is a possibility that with data analytics, one can actually reach out to farmers and actually guide them, like which crop can be best, how land can be used in a better way, and all those things. So, many things can happen. But this is all again a story, how the revenue model will work. So currently, to build this stack, government is investing, but going forward, various network participants will be the end user of this data, like farmer or organizations, food producing organizations, banks, who will be paying on software as a service model. So interestingly, still getting developed. This particular stack has central as well as state interest that has to be taken care of and requires a lot of coordination between these two. So that's how AgriStack is. Now the third is Honest, Vidya Lakshmi. So we if you see this diagram, so there are banks on one side, there are students on other side, there are educational institutions on the third side. So they have created a product which will connect the banks with the students. So right now, so far, for this particular portal, only scheduled banks are allowed, but I have been understanding that there is a plan to incorporate NBFCs into the platform along with PSUs. And as of date, there are total 37 banks. So a student which will have his identification can go on Lakshmi portal. There will be banks, the student's data will be there. They will try to manage it. Loans will be processed. So interesting solution in my view. And Protean earns approx rupees 100 or 150 from banks per application for which loan is disbursed. But interestingly, the revenue model may transition to where Protean receives a percentage of each transaction or a loan disbursal, because it will be difficult, like how many applications have gone successful and all of that. So there is a possibility that they will go for a percentage. So Vidya Lakshmi, pretty simple. Then Vidya Sarathi, I found this kind of interesting. They have launched a new product, Protean Life, also very recently. But most of the people like us who are in working jobs and work with organizations, we have something called CSR, Corporate Social Responsibility. And I keep observing that every time CSR happens, a company or HR who looks at some local institution whom CSR can be done, what can be done, and it's very fragmented, segregated, localized. They have created a Vidya Sarathi portal in which, if you see, corporates will be connected with beneficiaries and everything will have a digital record. So far, more than 1.6 million applicants have joined Vidya Sarathi and 1.3 million applicants have actually been processed. So lot of interesting activities are being done. Now, imagine why the name is Vidya Sarthi, because via CSR, you can actually help students who actually want funding, who actually want support for their education. So on one side, a CSR has tax benefits, so corporates are getting benefited. On the other side, people who actually need loan for educations are getting benefited. So I found this to be a very interesting thing, and again solving a problem. So I really see this as a problem, and they have a solution for it. And then Ayushman Bharat Digital Mission. All of us have gone through COVID, and all of us know uh, how COVID has helped create a vaccination in a country like India at a scale in such a short time. It cannot happen without DPI, digital public infrastructure. So if you see the Ayushman Bharat digital mission and look at the number of stakeholders that are there, lab, pharmacies, hospitals, central government, state government, manager, regulator, association. When you see this particular screen, and if you would not have seen the COVID vaccination that is being achieved in India, one can take a lot of questions that how is it possible in a difficult country like India? How can you reach each and every person and get vaccinated and everything? But we did, right? Via COVID, we have been able to do. So digital infrastructures are powerful and they have a snowball effect. So when they achieve a critical mass, the scale can be very huge. Again, so this is all fine. What is the revenue model? So the company received funding from Gates Foundation to run this project on a national level. The project is already funded. State governments do not need to pay initially. Payment from state government will begin once the project reaches the scale. And another potential use case involves insurance companies monitoring digital health data to offer insurance. Right now, insurance companies take a writing from you like what diseases you had and everything. So in my view, in next 10 or 15 years, each and every one of us data, whether it is health, education, or everything, will get digital. There will be AI models that will run on top of it. There will be data analytics done on top of it, and most of the institutions will use it to give services. So this is about Ayushman Bharat. Then there are two other interesting things that they are pivoting into: Protean Cloud and Protean InfoSec services. So one is security, one is cloud. So they are trying to build a cloud services like managed Kubernetes, DevOps. So these are pretty standard services that any cloud provider will have. But I think they are trying to leverage the stack that they have built on DPI, and then providing services on top of it, like infrastructure as a service, storage, desktop, and virtual. And obviously, having a government support helps them build these services quickly, scale them, and provide to needy. There is a bigger market in India for everyone. And then they are pivoting towards cybersecurity as well. So it is a very niche but a very starting area. There are very less details available, but still they are pivoting in cybersecurity. Right now, as I know, they have two data centers. One is in Pune, I believe, and then other is in Indore or somewhere. I don't know right now, but there are two data centers that they run. Now, another very interesting thing. They have built a data stack, uh, and that is a part of Protean Account Aggregator, which is a subsidiary of Protean. And if you see, there is a CKYC 2.0 that is going to come. That is actually announced by government. And in this, they will use AI, image recognition, and other intelligent engines to minimize manual intervention while processing millions of records. So CKYC 2.0, then they have come up with a additional upgraded version of eSign, which is called eSign Pro. What it does is, we do all this stamping, digital stamping, and all those activities, and there is a lot of paperwork involved, lot of physical presence involved, and all of that. So what they are trying to do, they are trying to come up with a product. I think they have already come up with a product, eSign Pro, where most of these things can actually be done digitally, and there requires a very less physical presence. So I found it very interesting. Account aggregator is a very basic thing, but they are doing it from a while. They have the RBI regulated digital platform. So account aggregator services, which are very generic, all of you will be aware. And then they are coming up with this Rise with Protein. So one-stop shop for APIs. So private players can use their APIs and build their solutions on top of it. So this data stack, I found it interesting and scalable. Now, so these are all the growth drivers, but interestingly, all the hard work that has been done, the stack has been built, Aadhaar authentication has been tested at a scale at India level. Now they have ambition to take the India stack globally. So the company has already participated in close to 13 RFPs and expect some of these to fructify in current FY, and some are in advanced stages of discussion. Now this is interesting. The identity, payment and data layer, which is well tested in India, they are trying to take that stack globally, and they have 100% subsidiary in Dubai, which will house the international operations of the company. So this is very interesting. This will be a high margin business. How will the revenue for international subsidiary go? There will be two sources: the technology development and deployment, which will be a one-time fee that will be paid upfront by those particular um, country or government. And then there will be service management, which will be annuity based, like we do for PAN, annuity maintenance and all of that. The management says that every RFP has a potential revenue of 8 to 10 million over 3 years, and margins for international business can be north of 30%. So if you see, they have done all the hard work over last many years, tested it in India. The stack is ready. And if you see, when Indian government did this recent exercise where multiple international dignitaries have came and visited Delhi, the Indian government pushed for this very much. Like, India said that they want to be the digital enabler of many countries, and that's what they are trying to achieve by that. The focus is majorly on Southeast Asia and African countries, because this is where we can penetrate. So as per the information, the 30 countries are adopting India's DPI such as UPI, Aadhaar, and Beacon for boosting social and financial inclusion. So very interesting development. If they could actually penetrate and achieve it, uh, that would be like a local company going global, especially in Southeast Asia and African markets. And these are big markets, and they can really do well. So what are the services that can go to international market? So all the services that they have built for India, so any, all, or every service can actually go to international market and help those countries with digital transformation. And there is a need for it. And our country and our leadership is actually driving it. Now, let's come to the real thing. A lot of storyification, narratives, and everything that we have discussed. So let's come to real numbers. So it's a debt-free company. It has 750 crore plus cash on books, consistently dividend payout. There is a flexibility because of the cash that they hold on book for inorganic expansions, and the operations so far have been funded by internal accruals. Now, what is the competitive advantage? They have unique market positioning, experiencing executing projects at population scale, one of the 3 authorized PAN service provider, key administrator, and all those. So we have already discussed. Now, in the ROE and ROCE trend, one thing which I found interesting, we are in FY24, and the data is suggesting that this trend is kind of bottoming out. So if the thesis play out, we might get an opportunity this year to buy this business at the bottom of the return ratio cycle. And then if you look above the EBITDA margins for FY24, again, the EBITDA margins appearing to be bottom out, and the possibility of margin expansion is possible. Again, economic cycle, business cycle in expansion mode. So interesting. So when I see their cash equivalent of 750 crore, I understood why the return ratios are low, because there is a big cash on books which is unutilized, Hence, the ROE and ROCE are actually suppressed. On this chart, I understand that margins have gone down because the operations are funded by internal accruals and lot of products have been built, lot of capabilities have been built, new hirings that have been done via internal accruals, and hence there is a possibility for margin expansion. This helps me give answer to couple of questions that I had in my mind earlier. By the way, one more thing. There is a saying that a debt-free company cannot go bankrupt. So that is again a really good thing to know. Now, please take this with a pinch of salt. This is like forward projections and forward numbers, how they can look like. So by FY27, it appears that the company can have a sizable growth in the top line. There can be a margin expansion also. You can look into detailed numbers later on due to paucity of time, but this is how the future projections looking like. Now, let's do a peer comparison. So these are all the peers, and on your left side, all the peers are there above all the services that they offer. And then if you see, Protean is there in all the first 5 services except Aadhaar enrollment. Rest all services, Protean is the only player which is there across all 5 categories. And now, if you see the forward revenues, EBITDA percent, PAT, PE, and CAGR. So if you see, eMudra is a identity player, CAMS, KFIN, you know. So this company is positioned well, and all these companies are trading at a higher multiples because the growth that is visible. So very interesting, especially EBITDA margin percentage 10, 14, 15, 18. And honestly, I may be wrong, but I think these are conservative estimation of margin expansion. And why, I will show you. If I have to summarize what I said so far in this presentation, or if you want to remember this presentation by one slide, you just take a look at this slide. So there is a concept called escape velocity. So when something has to escape the gravitational pull of Earth, it has to achieve an acceleration to a point where it can escape the gravitational force itself of the Earth. Now, I was thinking that Protean Egov, which has these 6 services in the center, and if management can walk the talk and actually execute, and the levers that are there around, high asset turnover. You are a stack business, you have already built a stack. So it can be scaled to any level, any country, any service, any solution. There is a possibility of margin as well as revenue expansion. The company is debt-free, cash-rich. Cash can be used for inorganic expansion. Scalability, I just spoke. Operating leverage will kick in once all the new platforms start, finding better penetration, and it's a platform business. So now, if the execution starts and if it has all these levers, for all of us to see is, can the acceleration reaches to a stage where it can escape with velocity from the gravitational pull and move higher. So this one slide will sum up my thesis of this particular business. And by the way, as I said at the start, धीरे धीरे सब कुछ होता है, and only when the execution kicks in, then only we will see the flowers and fruits. So I'm just trying to link what I have shown you at the start of the presentation and where I am right now. Now we will quickly go into technicals. So this is how the chart looks like, and right now the stock has come at a busy zone, and especially in my view, if in next 3-4 months, for whatever reason, sentimental, Trump and whatever, if the stock comes into the accumulation zone, I will be supremely happy. Whether it will come or not, I don't know. during the last correction, it took support around. If you see on the chart, it is clearly visible that the top blue line is where the busy zone is, and it is right now at that zone. So if it breaks that and comes into the lower accumulation zone, that will be really, really good. This is a market cycle, demand and supply. So price, volume, demand and supply. So the third cycle also has to match the business and economic cycle. My most important point is when you analyze a business, some of the businesses should not be analyzed on QOQ or YOY basis. Some of the business should be analyzed based on the potential and scalability of it. As a coming from a Gujarati business family, we like businesses which can scale big. So मेरा downside जो है वो कितना जा सकता है, 1600 रुपये जा सकता है आज की प्राइस से, लेकिन मेरा अपसाइड क्या आ सकता है, what scale it can go. So I will make sure that I protect my downside and I will let the upside play out based on market cycle, business cycle, economic cycle. And if I get little bit lucky, things can be really good. So this is how on technical. Now, let's not talk only about good things. Let's talk about challenges as well. So there can be interconnectedness between government ministries, state and central and elections and all of those. Real-time data availability, there will be people who will not be ready to give the data or come into a digital inclusion and all of that. But I have a firm belief that one cannot stop an idea whose time has come. So I think the time has come. India is a diverse country, multiple languages. So language expansion, language-based models, important. There is a Bhashini, which solves this problem, but still, I mean, that is a challenge. Future partnerships, DPI vision extends beyond government services. So what kind of future partnerships that can happen, how revenue models will expand and all of that. And cybersecurity, this is the biggest threat. So it is a digital public ecosystem. So there is a possibility of data protection and infrastructure safeguarding. So that is a challenge. And we must be understood of these challenges that can happen. 2030, where we can be. Right now, 2022, the digital inclusion is only 0.9%. And by 2030, in a normal scenario, it can go 2.9%. And in a bullish scenario, it can go 4.2%. And lot of smart people tells me, and I have a belief that our country is at an inflection point. There will be short-term roadblocks, there will be issues, but on a larger trend, looks like our country is at an inflection point, and the economic value add from digital public infrastructure has a potential to increase 3x. And if it goes, our natural question is how I can be part of this journey via ABDM, ONDC, Aadhaar, and all those. So Protean is at the heart of this. Now, these are some of the interesting snippets from ConCall. I will go quickly as we will have to cover up. They have recently launched new products, Open Finance Tax and Protean Life. Protean Life is again interconnected ecosystem for philanthropy and CSR connecting seekers and providers. So Vidya Sarthi was connecting CSR to students. Protean Life will connect CSR to all needy. And Open Finance Stack, very interesting. It enables discovery of loans, insurance, mutual funds, and the account aggregator framework will be leveraged. So these are two new products, and I think the new products will keep coming up. The management says that from current very low revenue split, they want to achieve 25-75, where 25 should come from ODE and 75 should remain in legacy. ONDC has expanded in 13 categories across food and beverages with almost 1 crore monthly orders till September. Now, on ONDC, Protean is actually involved at 3 layers. Infra level, so creating the tech infra for ONDC via gateway and registry services. Application layer by building buyer and seller application to plug into ONDC, and extension services. So reconciliation, settlement, issues, grievance management. So they have built all these multiple solutions across ONDC, and then they will monetize that. Right now, the company is generating revenue from infra layer only. where they have built a tech infra and they are doing a gateway and registry work. But later on, the other two layer, application and extension layer, extension services, will also start adding revenues to the ONDC. What is the differentiation? So again, it's about the reach and open architecture of DPI and not about the differentiation. So asking a question that how this is different from a private player itself is a bit overboard, because the goal is not the differentiation. The goal is social inclusion, financial inclusion, and saving cost and build a platform at scale to solve people's solution. AgriStack, there are 13 states already plugged in, but states will also need a tech stack so that they can collaborate with a central AgriStack and leverage the whole infrastructure. ONDC, it is a Section 8 non-for-profit company. It's for democratizing access and providing affordability on an open network. Protean will monetize via ONDC stack. And globally, in G20, which has happened in India, there was a clear call out that India will lead the charge in enabling the global south. So Ministry of External Affairs, along with METI and multiple international MOUs, where we are acting as a knowledge partners to countries to explain to them what DPI can do for them and what sort of use cases we can build. Again, what is the opportunity? New theme. And in my view, India's DPI, Protean is the best play. Government policy push, rapid growth, 140 crore population, digital transformation demand. Everybody wants quick solutions. It's a critical need. Nobody wants to go physically and do all the work. Proven track record. Billions of transactions they have managed at a large scale, complex and high impact solution. Everybody has experience. Margin accretive emerging verticals. So if these verticals start contributing, those can be margin accretive. Some of them have already contributing, but they have to achieve scale. Debt-free, dividend-paying, strong cash reserve, inorganic growth. Ambition to go global with higher margins. Team of experienced professionals and non-linear growth potentials. What can be the risk? Well, the products are still unproven and there is uncertainty. There is a digital literacy. Many rural India parts are still going to have internet and digital awareness. Cyber threats. Right now, the high valuation may be baking future growth and bet on emerging businesses. So valuation, one has to take a call. And another important point is National Stock Exchange hold 20% equity in this. And if anytime they decide to exit, that can create a huge supply. So please understand the opportunity as well as risk. We are studying business. We are not studying stock price. So please understand this. Now, where we are right now. So I think all of you must think about the broader things that can keep the market on tenterhooks this year. USD INR is trading higher and higher. FI selling is happening. We are on the cusp of Q3 FY25 result season. Union budget on 1st Feb. RBI rate cut in the second week of Feb. There is a temporary GDP contraction. Trump will be taking oath in 10 days from now. In March, there is a tax harvesting selling. Indian overall market valuation is expensive, and then there is a geopolitical stability. So please understand that irrespective of whatever business analysis I can do, when it rains, everyone gets wet. So no one is spared. So having an umbrella is a risk management. So please have your own risk management in place. What I can say about this business is, I will go to my first slide again, back all the way up, and I will try to connect you where we started. So everything happens in time without hurry, but everything gets accomplished. So let's wait for execution to kick in, and then we will have our fruits. And let's be part of the theme that is going to get played out over next 6, 7, 10 or 20 years. So this is not a stock for a trader. This is not for like some 5, 10, 20% kind of stuff. This is a theme. This is a business. This is a being part of India digital story, and one can look at it this way. Thank you so much.
Yeah,
Woody?
thanks, Prajat. Yeah, thanks for that. So we have certain questions in the chat.
Yeah.
I will just ask. So first question is on the security of data held by Protean, basically. So how much concerning this is?
Yeah,
Second,
I think
yeah.
right.
Second, similarly to this is because it's a data which needs to be secured. And does government or will government allow it to be acquiring some peers or not, or will allow this to be sold to some peers or not? This company.
I will tell you, none of our Aadhaar data or authentication data has been leaked so far as of now. I mean, touch wood. So, my understanding is they have shown the capability and scale to deal with this solution at a much larger scale without any issues so far. So, I will not say that it may happen, it may not happen, but I trust the capabilities of this company in building solution. Regarding data monetization, government can definitely use this data for their analytics and building solutions, and they have been using also so far. Whether they will sell it to peers and all of that, by ethics, they should not. Whether they will, I have no answer.
Sure. Another question is on the cash on the books. So any plans by the management to take it
Yeah,
up?
I see the management is saying my hunch is the cash will help them in inorganic growth. That is for sure. So far, they have done all the capex via internal accrual, which is again tells us the capability of the management. They are debt free. So eventually, if they find a good match, they should. But we also have to understand this one point is because this cash is there on books for a while and every year it is keeping piling up, the return ratios are actually suppressed. My hunch is I would be happy to buy at suppressed return ratios and having cash on books and proven wrong, then the cash gets deployed, something happens, and the margins start improving or return ratios start improving, and then I see, oh, okay. So I believe we will have to wait. Don't be in a hurry. That's why this slide is there. Don't be in a hurry to judge the management or their actions. Stay put. Try to be part of this journey. Go slow. Go along with them. If execution kicks in, we will get enough time to scale this.
Yeah. So there could be the one or two more questions. You can reply on the chat as you get the time.
Sure.
Okay.
Yeah.
So thanks a lot for your presentation. So the time is for audience poll, basically audience quiz, where you can win a voucher also. So I will share my screen. I hope once it is visible, please let me know. I hope now it should be. Yeah. Is it visible now, guys?
Yeah, Puneet, visible.
Yeah, okay, sure. So be ready. As I said, you have to choose the options. Basically, this is an example. So the question will come something like this, and you have to choose the option and put in the chat. You just need to put A, B, C, D, whatever suits best for the question. So the question number one. So you have to answer both the questions correctly and fastest. Paramount Communication is how many SKUs products? So option number A is greater than 500 or greater than 1000, greater than 2000 or greater than 5000. You can put the options in the chat. Okay, we'll stop at this point. Maybe somebody can write in the chat for the question number two now. We'll take question number two. from this point. So stop answering for question number 1. The question number 2 is coming up. JM Financial is moving towards which model? Balance sheet model, distribution-led model, or P2P lending model? Which it is trying to improve basically. Okay, I hope most of you have done the answers. So I will stop sharing it now and we'll look at the answers and I will come back to you by the time we'll return back to the presentations. Okay, so we'll stop for the morning session here and we will reassemble in maybe around 30 minutes, 2:15 or so, where Vineet will be taking for the next presentation. Okay, so I hope 2:15 is a good enough time for all of us. Fine, so I will stop the meeting here. Let's reassemble at 2:15.